Noting, given what we've seen of late, oil prices are flat compared to what we've seen in the immediate aftermath of the attack on Israel and Israel's response. Iron ore futures, putting that one in there to show a little bit of rebound in some of the commodities that have been under pressure of late. So iron ore up by 1.2% this morning, Tom.
Okay, the futures then, and the standout really is what is shaping up for the CAC current, looking lower, pointing lower by about a full percentage point right now. FTSE 100 looking and pointing lower by about 23 points. It looks like it's going to be a tough session, certainly for France.
Absolutely. So the luxury sector springs to mind, doesn't it, when you look at that divergence between the CAC 40 and the rest of Europe. So expecting to see LVMH as one of the stocks that stands out to the downside in a moment. But in terms of the big picture, this is the Spanish IBEX then, down by 0.5%. The FTSE 100 down by 0.2%. So the sense being perhaps that we've rallied so far yesterday on that Fed theme and on some... well, mostly on that Fed theme, really. So that seems to be what markets are focused on, unwinding a little bit of this morning. Here's the euro fairly flat. In fact, across FX land, we're fairly flat this morning. Interesting to know what's going on with the US Treasury yield curve, because we see buying at the 30-year and that yield coming down. We actually see the opposite at the 2-year. So we're seeing some interesting moves, divergent a picture between the 30 and the 2 years, so the long end and the very much shorter end of the curve. In terms of the European sovereign bond story, we see selling there. We see those yields going higher. Of course, the story of the last couple of days has been asking whether yields had topped. Maybe today looks a little bit different. And a mixed picture really on commodities coming through. So we see some weakness after recent moves higher, driven by war in the Middle East on natural gas prices. So those both down by around 5%, the UK natural gas and the European benchmark. Brent crude up 0.4%. Tom, what do you see on the sectors?
Well, that reflects in the energy sector, currently gaining 0.4%. One of two sectors, two of the major sectors in the green at this point, of course, in the first few seconds. Basic resources now turning on to the downside. Basic resources have been one of the leading gainers yesterday. And you saw at the top of the list, travel and leisure yesterday closing out with gains of more than 4%. That is shifting today, and the focus really is on the luxury space, those consumer products, and that sector now down by 1.6%. What is shaping up as well in terms of the auto sector is further downside there, 0.6%, and travel and leisure giving up some of the gains of yesterday, but nowhere near pairing the 4% upside that came through for that sector, currently down 0.4%. That is the picture again, the focus really on the luxury space on the back of some disappointing, for the markets at least, and the analysts, disappointing sales that came through from LVMH. A little bit of softness in Europe and concerns maybe that China isn't going to come back and isn't going to be shoring up the luxury space. We continue to unpack that story for you. Right now, across the benchmark, downside of around 0.2%, given the gains yesterday, just giving up some of that at least. The FTSE 100 currently off by 0.2%, and we're waiting for the CAC current to reflect. This is yesterday's pricing. We will get that for you, of course, and we expect to see some downside for the French major index in terms of the pressure that's coming through for luxury. Anna.
Yeah, a day where a lot of focus on that sector, it seems. The CAC not open yet, the DAX not open yet, voting for both of those. The no trade in LVMH to report to you yet either. So we are, as you said, that was yesterday's move on the CAC 40, the strength we saw in yesterday's session, waiting for some of that to unwind on the back of that LVMH story. Looking into the consumer product sector, we are seeing some of the other businesses a little similar to LVMH, so other luxury goods down by more than 4% in session today. So no doubt a theme we will certainly return to. Sam Unstead joins us from our Markets Today blog this morning and can tell us a little about some of the stories that we're dealing with here today. And it's interesting because China is one of the things that you flagged as of interest. And, you know, there's a China dimension to these luxury names in France that are waning. So we see Richemont, Moncler, Bruno Cucinelli, Burberry, Christian Dior all down by more than 4%, Kering and the rest all down by more than 3%. Waiting for LVMH to open up. What's the China focus for you this morning?
Yeah, I think so yesterday, some of the China news coming through really boosted, particularly the FTSE 100 yesterday. So, Tommy, you just mentioned that basic resources are very strong yesterday. Some of that was because it's been a very volatile week so far, and so there was an element of kind of recovery there. What we're now watching for is, my colleague Sophia Horchery-Costa came on here yesterday and said this new stimulus that China is said to be considering is still not the bazooka that everyone is looking for. But we are still waiting to see what it is actually going to be. And so we're, at the moment, we're kind of waiting on China to see where the story goes next.
OK, from China to the US then, and the comments from Mary Daly. She's not a voting member, but as Venram from our MLive team points out, she's known to be a hawk, and she's talking about a new neutral rate in terms of potentially getting to around 3%, and what that could signal then for markets longer term.
Yeah, and that's an interesting comment. And like you say, she's not a voting member this year, but it's still a comment to take into account, especially because this week we've had a lot of debate in terms of the way that bond yields have moved, as to whether that has done some of the work of raising rates again. So the debate really seems to have ramped up. We had Neil Kashkari as well speaking yesterday, discussing that exact topic.
I just need to correct myself. She's not a known hawk, she's a known dove, and that's the importance
she is, yeah.
that Venram was pointing out in terms of her comments, that maybe the new neutral rate is around 3%, or at least between 2.5% and 3%. Just want to flag that, Anna.
OK, yes, absolutely. Just a quick mention of LVMH, as we've been keeping our eyes on the open of that stock. LVMH, such a mega cap stock here in Europe, vies for that top spot, of course, with well-known diabetes maker, but drug maker. LVMH falling 6% on disappointing third quarter sales growth. So that's the latest on that space. We'll continue to watch the fallout from that. We see other luxury names, as we've been mentioning this morning, falling on the news out of LVMH overnight. Other news in focus, I suppose this sort of water cooler story that everybody is talking about, and this is Sam Bankman-Fried and the latest that's happening there on the crypto space in the aftermath of his company's demise.
I think we've talked about this story in the past, actually, and this is sort of a story that's going on in the background of the crypto market at the moment. And you know, the moves there have not been particularly wild, but it is certainly a story that's feeding into still a little bit of nervousness. You had an interesting story about Binance and their founder, sort of the kind of money that he'd put in to try to kind of, if you like, save the crypto market has kind of fizzled out over the last couple of years. But yeah, at the moment, still feels like it's sort of going on in the background, and is very much a story about Sam Bankman-Fried rather than the broader crypto market, at least at the moment.
Yeah, fascinating in terms of the court appearances and what we're hearing from that trial. Sam Unstead from our Markets Today blog, walking through some of the key themes for these markets and some of the colour around the trial of Sam Bankman-Fried. Thank you. You can get more, of course, from the team on the front page of the Bloomberg UK website or by typing TLiveGo on the terminal. Here's the big corporate story of the day, though. It is LVMH, and it's a squeeze coming through across the luxury sector and the weight that is having in terms of the downside for the CAC 40 over in France. LVMH currently down 7.7%, so a significant fall in terms of LVMH. But it's also, as Anna was saying, hitting some of the other luxury names unexpectedly, of course, or expectedly, I should say. Kering is down close to 3%. Hermès is off by 2.7%. So the big luxury names taking a hit from the softer than expected sales data out of LVMH, Anna.
Yeah, and as we were hearing from our guest earlier, it was across a whole host of business lines, wasn't it?
Yeah.
So it wasn't as if it all fell in one business line. And as a result of that pain we're seeing across the sector, Tom, consumer products and services, by far and away the weakest performing sector today. And the sector as a whole is down by 4.1%. So this is really taking a huge chunk out of European stocks this morning, in a sector we keep in focus. Let us take a look at some of the events that we're following for you today. We've dealt a little with some of the luxury stories. Let's move to some of the events on the geopolitical calendar, the markets diary, the IMF and World Bank annual meetings. They're continuing in Marrakesh over in Morocco. That's where Janet Yellen, the US Treasury Secretary, will hold a press conference at 9 a.m. UK time. Then at 1:30 p.m. UK time, we'll get US PPI data. Of course, that comes a day before the CPI print out of the US. That'll be closely watched. German footwear company Birkenstock makes its trading debut in the US later. And at 7 p.m. at UK time, we will get minutes from the FOMC's meeting last month. And it's interesting, the minutes conversation, often we talk about how they're backward looking and they tell us, the static picture in time rather than sometimes by the time we see them, they are a little out of date. But even Anna Wong of Bloomberg Economics saying they will offer us some interesting insights into whether we are really going to get another hike from the Fed in November. We've heard a lot from some of the doves around they don't think necessarily we need one, given what's been going on in bond markets, but not so much from the hawks. And you wonder if you get some pushback.
And to your point, Anna Wong's suggesting that maybe there's an opportunity. There would have been an opportunity for those officials to push back on the dot plot, of course. They marked the dot plot that there was going to be another hike coming through by the end of this year. Given the commentary we've had, at least from 3 of those Fed officials, it suggests that they are rethinking that. So whether that comes through in the minutes will be important. And then, as you said, the inflation story as well, rounding that out. And I just have to question, given some of the reporting from the Bloomberg, whether or not that focus is now shifting from inflation on the assumption it continues on its downside to those credit risks. And that's something that we were talking to Tatiana Grael-Castro about earlier in the show as well.
Yeah, absolutely. And Birkenstock, the listing of that business in focus. We've learned a little bit about the pricing. We were talking to our analyst earlier on in the programme about what's in focus there. Really interesting to see that the business is saying that they will pay down debt. But as she pointed out, of course, they have private equity ownership, and so that would be expected. And she was making a distinction between that and other businesses within this space where she didn't see such issues with debt levels, and therefore we're not necessarily going to see a wave of consumer businesses coming to equity markets to look for cash to pay off the cost of those debts as they rise.
Oh, debt. It's really about the Barbie bump, isn't it, Anna? Isn't that the more consequential story for Birkenstock? Birkenstock and the Barbie bump.
Story there.
Interesting. Bloomberg Intelligence, by the way, thinks they're pointing out they have just 1% market share at this point. So they're suggesting, look, there is huge growth potential for this business if it goes beyond the Barbie bump. Thank you. Right, in terms of the update there for Birkenstock. Coming up, Novo Nordisk is, of course, topping the Stock 600 leaderboard once again today. LVMH is playing a role in that, but also its recent drug trial success. More stocks on the move with the one and only Joe Easton. That is next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot. In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the U.S. and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
This is Markets Today. We are 12 minutes into our European trading session, and real divergence across European equity markets depending on how many luxury names are listed in your index. Let's get an update on some of the individual stock moves. Joe Easton has a briefing for us. Joe.
So LVMH slammed in the opening trading over in Paris. Now, this could potentially be the biggest drop since the COVID-19 outbreak almost 3 years ago. It was down around 8% a few moments ago, coming back up slightly, down at 6%. Now, Morgan Stanley is saying that the surprising issue in this release is that the European buyers are much weaker than expected. Chinese demand actually held up better than they thought it would, according to Amit. So we're seeing Kering also declining, one of the biggest droppers, the owner of Gucci. And also the drinks makers are dropping as well. We've got Remy Cointreau on the screen, also Pernod Ricard, the big makers, with LVMH reporting softer sales in the Moët and Hennessy drinks brands, alongside the clothing as well. We've also brought up Heineken. Now they've got a downgrade over at Morgan Stanley, actually holding up pretty much better than expected, but slipping at the moment. So drinks in focus following that note, and also those LVMH comments. Then over in healthcare, it's all kicking off today. We've got news from yesterday from Novo Nordisk that one of their weight loss drugs can potentially stop deaths in liver and kidney failure, and that one is boosting that one around 4%. Dialysis makers Fresenius down 20% at the moment in Germany. That is potentially the biggest drop on record. They went public in 1996 and haven't fallen as much as that in their history. GlaxoSmithKline, huge news for them. They've settled a Zantac lawsuit over in the US. This is their drug for throat illnesses that potentially caused some cancerous illnesses, and they say they've settled. They haven't disclosed how much they're paying, but that stock is rising at 1.5%. Couple of other big movers, lots of big moves today, particularly here in the UK. Noting quickly, Travis Perkins, they are saying DIY sales slowed down in September. Page Group, the recruiter, seeing a decline in some of their fee income. That's the recruitment firm. And also AP Moller-Maersk downgraded at Deutsche Bank, who said shipping demand is starting to slow, and that one is down 2%.
Joe Easton from our equities team, thank you very much indeed. Right, let's get some more analysis and calls on these FX markets. Treasury yields posting some of their biggest single-day declines all year. Yesterday, it's pretty pronounced. On expectations the Fed could be done raising interest rates, that followed comments from several Fed speakers. The dollar consolidated as traders await producer and consumer price data, as well as Fed minutes. The minutes out later today for clues on the rate path ahead. Thanos Vanvagidis, then head of global G10 FX strategy at Bank of America, joins us for the take on the FX market. So there we have it, Thanos. We're getting clear signals from Fed officials that we are getting to pause territory, that enough work is being done by these bond markets in terms of tightening of financial conditions. The Fed doesn't need to do more. Sell the dollar, Thanos.
Well, I think the message from the Fed is that they're done, but we still don't know if their job is done. I wouldn't call it wishful thinking. I would call it hopeful thinking. Inflation is moving in the right direction, but has been sticky, and the US economy has been very resilient. Most likely, for now, the risks to the dollar are more balanced, particularly given the strong rally we have seen since the end of July. But really where we go from here depends on the landing scenario that we're going to see. And for the dollar to really weaken, because it remains historically very strong, we need the Fed to shift its focus from inflation to growth. And I don't think we are there yet. In the short term, we don't necessarily believe that the dollar can strengthen too much from where we're here, but a lot depends on the data. And once we get the so-called landing scenario, a lot depends on whether this is what it takes for inflation to start coming down, so eventually in the medium term to long term, the dollar starts to weaken, or we get a stagflation kind of scenario or slowflation scenario in which the dollar can get even stronger. So there is a lot of uncertainty on where we go from here.
A lot of uncertainty about where we go from here, and that's just on the dollar side. Plenty of other currencies to talk about, of course, as well. Thanos, I was reading some analysis by another house talking about how the pound is at risk from deteriorating data. I mean, maybe you apply that to the dollar as well, but it has a different reaction function. But if the pound is vulnerable with deteriorating data, the IMF talking about how rates need to stay, well above 5% and stay there for a year, the Bank of England talking about how they need to stay there, Table Mountain style, for quite some time. What do you expect to see on the pound?
Now, the pound so far had a good year to a large extent because the market was too pessimistic on the UK economy. Data has been weak, but better than expected. Recently, we have seen some negative data surprises. Also, the fact that the Bank of England effectively has paused has affected sterling. Now, on cable, it's all about the dollar. On euro sterling, it's very difficult to get too bearish on sterling because the data in the Eurozone is also very weak. So I would argue the risks are balanced, and both the Bank of England and the ECB, effectively, they are done. So it's all data dependent. It is hard to have a strong view one way or another on sterling, I think.
Okay, but to be clear, you do think the BOE is probably done at this point?
I think everybody's done. This is what the Fed, the ECB, the Bank of England, they are done hiking. I don't think they're done fighting inflation. And in a positive scenario, inflation is sticky, but at least it continues moving in the right direction. In a more negative scenario for risk, which will affect the dollar positively, we get stuck somewhere on the way.
Is weaker pound still a risk for inflation, given how much energy we have to import into this country?
Up to an extent, yes, but I don't think this is a driver. I think the key in the UK in particular, but also in other economies, is the labour market, because regardless of everything else, it is extremely stretched everywhere. And wages are increasing more than the core inflation rate in most cases. So we already have second-round effects. We need to see a weaker labour market to feel confident that inflation is really on its way down.
Can I ask you what's going on with the yen? Because you have some very eye-catching calls about the yen, Thanos. We've seen, of course, something happened when the yen got to about 150. Well, we'll have to leave it to everyone's analysis to work out what that was. But you've got a suggestion that you think it peaks at 155, but under certain criteria, it could go to 160, 165. What would take us there?
Now, would you assume that the Bank of Japan will stop yield curve control and will move rates back to zero in Q1 next year? Until this happens, we still believe the risks for dollar-yen are to the upside. But then what happens next depends more on the Fed, because we don't expect a proper policy normalization by the Bank of Japan. But if the Fed does not cut rates next year, which is a likely scenario, then we see dollar-yen moving to 160 or even 165 because of the carry.
Thanos, thank you very much. Thanks for joining us. Thanos Mambakides, head of Global G10 FX Strategy at Bank of America Global Research. That's the FX conversation. This is Bloomberg.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that, because we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women, like what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better and we shouldn't be an afterthought.
The top names in global leadership leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Welcome back. This is Markets Today, 23 minutes into the European trading day. European stocks paring some of the earlier losses of the session, but the luxury space is weighing on consumer as a sector, currently down a little over 3%, giving disappointing sales numbers out of LVMH. Energy is at the top of your list, gaining 0.9%. And on energy, we have a redhead that crossed the terminal just in the last minute or so. Qatar Energy signing a 27-year LNG supply deal with France. So a long-term supply deal with France, of course, as Europe continues to readjust to the need for LNG, liquefied natural gas, from suppliers other than Russia, in the light, of course, of Russia's invasion of Ukraine. Qatar Energy, by the way, has previously signed deals with Germany, with the Netherlands, and with China as well. But this is France signing a 27-year LNG supply deal with Qatar Energy.
And worth noting, given we're heading into cooler weather, we understand from Maxar Technologies that temperatures will drop over the weekend. Cities, including London and Paris, could be 5 to 6 degrees cooler than normal. There's not been cool at all recently by Monday. So this worth considering when we're thinking about gas markets at this point.
And European gas is easing this morning after rising about 30% this week. This is the broader story, but with the focus on what's happening in Finland, because it comes as Finland treats a gas pipeline leak as suspected sabotage, and a line just crossing in the last minute or so. Finland identifying small seismic event when that pipeline was damaged. Let's get the latest then with our reporter on the ground in terms of what may have been the cause. Ott Umelas, who's Bloomberg's editor for Nordic economy and government news in Oslo. Ott, thanks for joining us. How likely is it ultimately that Russia was behind this?
Now, this is the theory that the pundits have obviously brought up ever since the leak was discovered. And what we do know at this point is officials in both affected countries, so both Finland and Estonia, have been careful to avoid mentioning Russia and have basically declined to comment on whether Russia could have been behind this. But they basically say it's likely caused by external actors or external actions. And why they're saying that, there's besides the gas pipeline leak, there's also the telecoms cable close to Estonian coast that has been damaged basically in the same time window. And since these events geographically they're a bit apart from each other, basically that's also one part of the reason why authorities suspect that this is deliberate.
Oh, very briefly, what do we watch next? There's a NATO meeting coming up.
Yes. We do know that the technical investigation is going on. Basically, since the incident was in the not directly in the Finnish territorial waters, this implies that it sort of couldn't bring in any scope of NATO response.
Okay.
But
Ott, I do apologise. I'm going to have to jump in because we're about to go to a break. But thank you very much for bringing us the update. Bloomberg's Ott Umelas. This is Bloomberg.
been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted, and I think many people, even in the markets, have not quite understood, in my mind, how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that the small nation is forced to choose sides.
Bloomberg. Context changes everything. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Markets Today. We're 30 minutes into your European trading day. Here are your top stories. The US speeds up military assistance to Israel. Turkish President Erdogan criticizes President Biden for sending warships to the region. Elsewhere, Treasury yields dropped by some of the biggest margins this year on hopes the Fed could be done raising interest rates. Plus, LVMH plunges, briefly erasing this year's gains as the world's largest luxury company reports softer sales growth. Other stocks in the sector are also trading lower. So, Tom, a focus on, well, a market that is deceptively calm on the surface. So overall, the Stock 600 not moving anywhere, but actually the CAC 40 really weighed down by luxury names.
Yeah, you lift the hood, and it's all about the luxury sector right now. We're pushing past the stimulus story from China, and there's still the expectation, of course, markets still expecting that maybe you're getting to a point where the Fed is at pause, given a number of officials have come out and talked about the work that's been done by the run-up in yields in terms of the tightening financial conditions. That, of course, remains a key factor. We get the Fed minutes out later today. We get the inflation data, PPI out today, CPI out tomorrow. So by the end of this week, we should have more clarity, arguably, in terms of where the Fed goes from here. But the corporate story of the moment is all focused on LVMH, the disappointment around the sales and the ripple effect across the luxury sector. Across your benchmark then, as Anna was saying, it's flat. The DAX is currently off by just 5 points. The FTSE 100 is currently gaining about 10 points, up 0.1%. Let's have a look at the sector story then and just what is transpiring in the luxury space and the consumer space on the back of those disappointing numbers out of LVMH. They crossed last night, of course, in terms of the close, just before the close in the US, and now that is factoring into the broader downside that you're seeing across a number of the competitors for LVMH, as well as that company itself. So here is the focus then, 3% downside that we're seeing in the consumer sector, of which the luxury names sit, and that is where the downside pressure is coming from. Soggier sales in Europe, a little bit of concern as well coming through from China, and a number of different brands across the portfolio for LVMH taking a hit in terms of the sales not coming in as strongly as the markets had expected. And again, that is weighing on the likes of Kering. It's weighing on the likes of Hermès as well, as we adjust to maybe a moderation of that demand that had come through. Very strong demand for luxury, and you saw the run-up in the stock price for the likes of LVMH. It was earlier in this year, in the summer, the largest European company by market cap, but that has come off now. Since about July, that stock is down about 20% or so. Basic Resources was one of the leading sectors yesterday on the back of the stimulus news coming through from China, the reports from the team at Bloomberg that you could see as much as $137 billion in additional infrastructure spending coming through, and Basic Resources continues to gain in the session today. Energy also seeing gains of around 1.2%. You are seeing iron ore prices up, that's lifting basic resources, and oil prices are picking up as well. Energy standing out with gains of 1.1%. Travel and leisure, by the way, the leading sector yesterday, posting gains of 4%, currently down 0.3%. Across the benchmark, you're seeing very modest gains, though, of 0.1%, Anna.
Okay, so those are where we are on the markets, responding, of course, to shifting Fed narratives and the geopolitics and war in the Middle East. Let's get an update on what is happening there and some perspective. The Israel-Hamas war enters its 5th day with the combined death toll from the war approaching 2,000. Israel's military says it's building a base for thousands of soldiers in preparation for the next phase of its retaliation as the US pledges its full support to Israel. We're joined now by Mustafa Barghouti, who is leader of the Palestinian National Initiative, a democratic movement distinct from both Fatah, who used to hold power in Gaza, and Hamas, who hold power currently. Mustafa, thank you very much for joining us. I want to start by asking you your expectations around Israel's next move. They talk about the preparations they're making. There is a lot of expectation there will be some sort of ground invasion. What do you anticipate?
Yes, it's very clear that the Israelis are planning a possible ground invasion, which could lead to even a further explosion in the region, because that could mean that there will have another front in the north with Hezbollah maybe joining the fight. But the most important thing at this very moment are three things. First of all, there is a total and complete blockade on 2.2 million civilians in Gaza. Israel is depriving them from water, electricity, food supply, and medications. This is creating the worst ever humanitarian crisis. And the second thing is that these people are constantly bombarded by Israeli airstrikes, which has taken the lives of almost 1,000 Palestinians, including 260 children who were slaughtered by these airstrikes. And the airstrikes are continuing. People in Gaza say there is no safe place anywhere for anybody. And the third thing was the very alarming statements by Israeli military spokesperson and Netanyahu himself about deporting and ethnically cleansing all of Gaza by forcing people with airstrike to go to Egypt. This is causing a very huge alarm in the region, and it is already involving very strong protest from the side of Egypt.
Yeah, I'm not sure there's any evidence that officials in Israel have talked about ethnic cleansing, sir. And there's a question, of course, as to what you would expect Israel to do in a situation where they have seen children murdered in front of their families, babies beheaded, and a number of their citizens, over 100 of their citizens, taken hostage by Hamas, which, again, is deemed a terrorist organisation by the UK, the EU and the US. What would you have Israel do in that situation? They have no other option, do they?
No, they have many other options. First of all, one crime doesn't justify another crime. And Israel claims that it is a democracy, claims that it is respecting international law. At this very moment, they are really slaughtering children in Gaza. They are really besieging Gaza. And what Mr. Guterres, the UN General Secretary, said is a war crime, said a violation of international law by blocking food and supply and water and electricity to civilian population. The civilian population in Gaza is not responsible for the fight. And you cannot conduct collective punishment against a whole population because of what has happened. As you know, my position is very clear. I am a person who advocates nonviolence. I am against the killing of any civilian, whether Palestinian or Israeli. But what has happened does not justify slaughtering Palestinian children and also planning to deport the people from their homes to another country. What I told you about the issue of ethnic cleansing was very clear. When the Israeli military spokesperson says that all the people in Gaza must leave Gaza and go to Egypt, that means ethnic cleansing.
Well, I have heard Israelis suggest that Egypt could open the border and allow Gazans to leave. I suppose Israel would suggest that's because they're trying to get at Hamas specifically, who they deem, and many in the West deem, to be a terrorist organisation. What would you like Egypt to do, Mustafa, in this situation? Is there a role for Egypt to open its border and to allow some of those in Gaza to leave, even temporarily?
No, 70% of the people in Gaza were ethnically cleansed by Israelis in 1948. They all were deported from the towns and villages which were erased by Israel and became part of Israel later. These are refugees. You can't enforce on them another ethnic cleansing. And Egypt is asking and demanding that it would be allowed to supply Gaza with water, with food, with medications for the civilian population there. Nobody can take 2.2 million people, 2.2 million civilians as hostage, and also try to enforce on them an ethnic cleansing with airstrikes. This is unacceptable. You asked me what are other options. There is a very simple way which is good for both Palestinians and Israelis. It's to immediately have a ceasefire, to start a process of de-escalation, immediate release of all prisoners on both sides, an immediate exchange of prisoners, and that would keep their lives safe. But at this very moment, Israeli airstrikes is threatening not only the Palestinian lives, but the lives of 200 Israelis who are in Gaza now. That is unacceptable too.
Mr. Barghouti, how is this changing the politics on the ground in the West Bank and in Gaza? As in, does this strengthen the hand of Hamas, or does it indeed allow people to look to non-violent organisations like yours? Are you expecting more support? How are the conversations unfolding between Fatah, between PNI, your organisation, and others in these two territories?
If you talk about popular support, yes, we are getting much more support than ever before. All the indicators show that if we have free democratic elections, which we are demanding, Fatah and Hamas, none of them will get majority. And so that will be a pluralistic democratic system where we can play a very important role. So that is possible. And but before getting there, we have to stop this war. And that means immediate actions to stop the violence that is going on, that is threatening the lives of both Palestinians and Israelis. Initiating a ground operation now will only mean thousands and thousands of people killed, thousands and thousands of children dying. I want also to say that what has happened so far has also had a very important impact. For many, many years, Israel was trying to say there is no Palestinian issue and that it will solve the problem by normalizing with Arab countries that have no fight with Israel and marginalize the Palestinian case. This has failed. Today, the world sees that the problem we face is a result of 56 years of Israeli military occupation of the West Bank, Gaza Strip, and Jerusalem. People see that this occupation that has transformed into a system of apartheid, much worse than was in South Africa, is the problem, and that needs to be dealt with. I hope the international community will pay attention.
They would point out, I'm sure, the Israelis would point out that they say they do not occupy Gaza anymore, but they did until the mid-2000s, your point, I'm sure. Let me ask you about your concerns around widening of violence, Mustafa. We're seeing reports from media in the region saying that missiles have been fired from Lebanon towards Israel. What are your concerns about other players either becoming involved or increasing their involvement here?
It's quite possible. That's the risk. And Israel will find itself in a war with Lebanon and with the Hezbollah and maybe with other parties in the region. That's something that everybody should do very hard, work very hard not to have. And that's why I think Mr. Netanyahu is playing a very dangerous game. He's playing with fire here. And let me say that I see in him, and unfortunately I have to say that, a very opportunistic politician who cares only about himself, about preventing him from losing his position, because any inquiry now in Gaza will show that he was a failure. The failure of their army, the failure of their intelligence. He personally carries a major responsibility for that. And this man wants to keep his position, and he's ready to widen the fight. And he doesn't even care about the lives of the 200 Israelis that they say are imprisoned now in Gaza. I believe this is a very dangerous policy. You said that Gaza is not occupied, but if Gaza is not occupied, how can Israel prevent the supply of water, food, electricity, because they are conducting a different kind of occupation by besieging Gaza for the last 17 years.
And there's a question as to how much, if any, international aid can get in to Gaza at the moment. And clearly, Mr. Netanyahu is a controversial figure within Israel. I don't think there's any evidence that we have seen that he doesn't care about the hostages that have been taken by Hamas. But we appreciate your time. We appreciate your analysis, Mustafa Barghouti, leader of the Palestinian National Initiative, which espouses non-violence in the region. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. On's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer this Wednesday on Bloomberg.
This is Markets Today, 46 minutes into your European trading day this Wednesday, and European equity markets actually mostly in the green, apart from the CAC 40, which is down by 0.5% this hour. Let's go to the source of that negativity. Shares in LVMH are under pressure today following disappointing third-quarter sales growth. The drop saw the French luxury goods giant briefly erase all its year-to-date gains. Let's get to Bloomberg's Caroline Cornan, who joins us now from Paris with details. Caroline, is LVMH resisting the slowdown in China? Certainly something negative in these numbers.
Clearly not resisting the slowdown in China, at least from the investor reaction in the share price this morning. LVMH, quite a different story from the beginning of the year when luxury was seen as the new tech driving the CAC 40. Today, as you just mentioned, erasing their year-to-date gains. They suffer from weak demand in China, soft demand in the US, and also soft demand from their champagne division, and also still inflation impacting the aspirational consumer. If you look at the detail, the biggest division, which is the leather goods division, is up 9%. That is missing estimates. That's, of course, Louis Vuitton, Christian Dior. The wines and spirits division, minus 14%, much worse than expected. That division suffers, for example, from soft demand for cognac in the US, soft demand also for the jewelry and watches division, even though Bulgari is doing slightly better than Tiffany, which is more exposed to the US consumer. There was only one bright spot, which is the retail division and strong trends at Sephora. But the CFO, Guillaume, said last night that we're seeing some kind of normalization at LVMH after years of growth. But it is the first time they miss in more than 3 years.
Yeah, first miss in more than 3 years. Important context. Is that it then, Caroline, in terms of the luxury rally? Is the luxury rally over now?
Well, it's hard to imagine that the luxury stocks will stay out of fashion forever, but really depends on when China reaches the bottom. In fact, if you look at LVMH in the third quarter, the sales in Asia, excluding Japan, were still up 11% the last quarter. Morgan Stanley is saying that Chinese demand will still represent about 12% of luxury spending next year. Of course, it will also depend on the US situation, whether we're seeing a recession and whether we're going to see also some rebound in, especially in wines and spirits division over there. However, some other things might help. For example, higher oil prices, which could boost spending in the Middle East going forward.
Okay, Caroline Corner in Paris. Shifting focus now, and a story that is evolving. Australian journalist Chung Lei has flown back to Melbourne after being released from detention in China. Chung was first detained by officials in Beijing in 2020 on espionage charges. Let's get more then on this story with Bloomberg's Emma O'Brien, who is in Sydney. Emma, what does this say about relations then between China and Australia and how those relations have shifted?
Yeah, I mean, I think it's obviously a sign of a real improvement and a restoration of relations between China and Australia. Chung Lei was detained at around the lowest point in those ties, which came after the former Prime Minister, Scott Morrison, called for an inquiry into the origins of COVID-19 and made some aspersions as to China's role in that. She was detained on espionage charges around that time, and since then Australia has seen a lot of retribution from China. But since the new government has come into power following the Morrison one, there has been a slow rapprochement and a restoration of ties, of which this is a very firm signal that those are on a better footing.
Emma, thank you very much. Bloomberg Senior Executive Editor Emma O'Brien in Sydney with a briefing. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
This is Markets Today. We are 53 minutes into the European trading day. Sentiment has turned positive. European equities are now posting very modest gains. US futures are pointing higher, and a lot of that is down to what's happening in the Treasury market, with the yields coming quite sharply, falling quite sharply in terms of yields. Let's get more then in terms of the analysis around particularly the Treasury markets, and bringing Eddie van der Volt joining us from our M Live team. So Eddie, quite sharp moves lower in terms of yields. Most specifically, or most prominently, I should say, towards the back end, the 10-year yields moving lower by 8 basis points, 457.
Yeah, definitely a bit of a move into havens, right? You've got to wonder whether this is about geopolitics, which we're constantly seeing that in the background at the moment. At the same time, there's somewhat of a circularity to the Fed's argument, saying that if we see longer dated yields high, then we don't have to hike so much. But if we don't hike that much, maybe we don't see yields at the back end that high. So there's I think some markets are testing the circularity in the Fed, but at the same time there is definitely we've seen over the last couple of days the yen, gold, and of course treasuries wanting to get a bit of a bid.
Yes, and on that geopolitical tension that maybe is pushing investors into treasuries, into the perceived haven that they might think they find there. Israel, a headline crossing the Bloomberg, Israel saying that an anti-tank missile was fired from Lebanon at a military post. We've seen some levels of violence across that border, but we continue to watch that to see if we get meaningful escalation. That is, of course, a fear in the region. So that's the geopolitics, and that maybe is playing in here as well. In terms of the data and the calendar we have ahead of us then, Eddie, we've got PPI today and CPI tomorrow. Still a focus on inflation, I'm sure.
Yeah, look, it's unusual. PPI comes first this month, and I think therefore PPI is the big one, right? Usually we really trade on CPI and kind of dismiss PPI, both because it is, it's not focused on the consumer, but also because it comes second. Now this time, there is, if you look at the data, there is a strong correlation. You can predict CPI if you get the PPI number first. And because we do today, I think some of that volatility shifts forward. Traders will trade PPI as if it is CPI. And therefore, I think there's going to be a lot of action around that. And, Markets Live will obviously go very big on the coverage for that.
What about Fed minutes? How much focus will there be? So Anna Wong and Anna here was pointing this out from Bloomberg Economics, pointing out that arguably the Fed minutes are more important this month.
You know what? The Fed minutes are important. We want to kind of see whether, the comments from Daly and Jefferson and Logan is backed up by the rest of the crew at the Fed. Whether the rest of the council says, yes, long end yields will help us tighten monetary conditions and therefore we don't have to hike so much. But at the same time, you've got to wonder whether those minutes are not now a little bit out of date, because we have had a lot of dovish commentary come through.
Right, yeah. Were they thinking those dovish thoughts at the time of the minutes, and how would that stand up against the dots, I suppose? Eddie, thank you very much. Thanks for joining us. Eddie van der Volt from our Markets Live team, with a reminder of the top stories that markets are focused on this morning. And remember, you can get up-to-date analysis from Eddie and the rest of the Markets Live team. MLIV Go is the function to use on the Bloomberg terminal. Plenty more still to come. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Like, please, like, really actually tune in. I desperately need an audience.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything. And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here with special coverage from the IMF annual meetings in Marrakesh, Morocco. Now, coming up on today's program, President Biden speeds up military assistance to Israel, but Turkish President Erdogan criticizes the U.S. for sending warships to the region as the combined death toll tops 2,000. Treasury yields dropped by some of the biggest margins in the year on hopes that the Fed could be done raising interest rates. And we also look at luxury LVMH slumps on disappointing third-quarter sales, more evidence that post-pandemic luxury boom is waning. Now, we'll also have some top interviews this morning. This hour, we'll hear from the annual meetings of the IMF and World Bank. We'll be speaking to Gita Gopinath, the first Deputy Managing Director of the IMF, as well as South Africa's Reserve Bank Governor, Letsegia Kganyago. Now, let's also take a look at the European markets map. A lot of the focus, of course, is on a lot of the luxury stocks. Now, European stocks have stalled after clocking their biggest gain of the year. That was yesterday. There has been some disappointing corporate news, and that seems to be tempering optimism about the outlook for interest rates and economic stimulus from China. Again, investors today will definitely be watching for any hints that the Fed minutes will suggest the central bank may not follow through with the last hike indicated in its economic projections. So watch out for Fed minutes a little bit later on. Now, to put all of this together, to talk about inflation, some of the pressures on central bank and world growth, we're joined by Ayhan Jose, the Deputy Chief Economist of the World Bank. Thank you so much for joining us. There's so much going on, and I wonder whether, foreign affairs and actually the bloodbath that we've seen over the last 6 days, we always think of the loss of life, but what that means for the way that the world is headed economically.
Thank you, Francine. And of course, horrific events in the Middle East, human toll is very large. That should be in our minds going forward. When we think about the economic implications, it's still early to basically say something concrete. Obviously, we might see some movements in oil markets, especially if the conflict spreads. There could be broader repercussions, but it's too early to basically make a estimate of how this will affect global economy. One thing is clear: we knew that geopolitical tensions were there. It was a major risk. We did not expect erupting in Middle East, but it did happen.
Do you worry that geopolitics, once again, could actually take the forefront of what the world is living through? There seems to be many possible shocks around the world, and is it just a matter of seeing what's next?
I think geopolitical tensions already have taken over. Great power rivalry is there. We see that in the context of trade. We see that in the context of investment networks. And of course, you have war already in Ukraine, Russian invasion, and now you have war in the Middle East.
What does this all mean for trade and economic growth?
So far, global economy has done remarkably well, given these multiple shocks we have seen over the past 4 years. Having said that, global growth is slowing. We are expecting growth to be lower than what we saw in the prior decade. Give and take 0.5 to 0.6 percentage points. If you look at investment, the weakness is there. Interest rates are now in restrictive territory. That means real interest rates are positive. Let's don't forget those rates were negative in the 2010s. And of course, when you look at trade numbers, they are really worrying. Global trade is basically going through a trajectory, the weakest post-global recession recovery. When you look at over the past 50 years, global good trades is contracting. Services are okay, but that's also coming down. All in all, the picture on the trade and investment side is really worrying.
Do we underestimate the impact that these higher interest rates have on the viability of certain projects? So the cost of credit, the cost of capital, and what this means for the emerging markets?
Obviously, we underestimate, given how weak the investment numbers coming out in emerging market and developing economies, and given that interest rates are going to be elevated going forward. In an environment you see the inflation coming down, real interest rates are going to be positive and going up. So the cost of borrowing is going to increase. We are in Morocco, growth in Africa region per capita this year is close to zero. So all in all, we need economic growth, and that growth has to come from somewhere if it is not coming from investment.
Where's the growth going in China? Again, this has been one of the linchpin questions that we've had, and the impact that whether they grow less than expected, the impact it has for the rest of the world.
So in the case of China, we downgraded our forecasts for this year as well as next year. And we are really worried about recent developments in financial markets, especially during the past 2 years. The hope is that we know Chinese authorities have the power, have the space to intervene, and if necessary, aggressively. And so far, they have been very careful how they approach the financial market problems in the property sector. But we are hoping that in the coming months, they are going to be even more aggressive in their interventions. China is very important, especially for commodity exporting economies. And given these geopolitical tensions materializing, in that space, we might see even more volatility.
But are we entering a new phase of deglobalization also because of geopolitics?
When you look at the diversion of trade from China, when you look at how countries are trying to, in a sense, bring back the supply chain, and they are trying to be very careful how they orient their, foreign direct investment, there is retrenchment. We don't want to say, outright deglobalization, but all of these are happening in an environment. We need more cooperation. We need more countries working together, given the global challenges, and that's really worrying.
I mean, if you're an economist, what also really worries you is stagflation, right? Which is extremely difficult to put to one side. Is Europe definitely going to be in a stagflationary environment?
Recent inflation numbers in the context of Europe have been, quite well, I would say. And financial market gyration took place in the United States, but that have global implications in terms of raising the cost of borrowing. ECB obviously in a corner, mitigating the kind of the inflation problem while trying to make sure there is no recession in Europe. The challenge is going to be during the next, 6 months, how the data is going to come and how the ECB is going to, in a sense, position itself.
But do you worry about complacency from central banks, or do you worry that they're too aggressive in trying to deal with inflation and that it will naturally come down?
The big challenge was at the beginning in advanced economies, central banks were kind of late starting the tightening cycle. But After that, they were very determined, and I would say so far so good. So far so good in terms of messaging as well. In a sense, between all these risks, the desire to not to be very aggressive because of the impact on the real economy, we are optimistic. Today, the likelihood of soft landing is higher than 10 months ago.
And what's the level of coordination that you're seeing amongst countries? It's always extremely interesting to come to the annual IMF World Bank meetings because you also see whether countries are working together or not.
Now, there are serious challenges. There is desire to coordinate. There is desire to collaborate. But that will require more than that. It will require implementation. And in some cases, it will require real funding on the table, given the huge development challenges. Our hope is that we will come out of these annual meetings with a very determined, clear roadmap how to reform these institutions, multilateral institutions, how to provide the necessary funding to cope with broader development challenges.
Thank you so much for joining us this morning. That was Hayan Okoze, the Deputy Chief Economist at the World Bank. We're also getting actually from Morocco, from Marrakesh here, where we are just a couple of hundred feet from us. Janet Yellen is speaking at her first briefing here at the IMF World Bank meeting. She says that they will meet the Chinese central bank governor. Now, this is the first time that we'll really hear from the PBOC governor in real life outside of China. Remember, he wasn't appointed that long ago. Janet Yellen there at the press conference with many members of the press, including Bloomberg News journalists there, also saying that the U.S. is backing an EU windfall tax on frozen Russian assets. Of course, we'll be continuing to listen and to monitor to Secretary Yellen, and we'll be back with any breaking news shortly. Also coming up, the U.S. Secretary of State, Antony Blinken, is to travel to Israel. This as President Biden vows full military support. We'll bring you the latest, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Next week on AI IRL.
I do think it has a tremendously positive effect on democratizing technology. I mean, just imagine what it must feel like if you are a country in Latin America, Sub-Saharan Africa, or in other parts of the world where you just don't have either the money, because you need a considerable amount of money, or the very significant GPU computing capacity, or the data to build any of all of these things.
Lebanon's state-run NNA news agency says 2 missiles were fired from Lebanon towards Israel in the last hour. Now, the Israel-Hamas war is entering its 5th day, with the combined death toll approaching 2,000. President Biden says the U.S. is speeding military assistance to Israel following Hamas's assault over the weekend.
When Congress returns, we're going to ask them to take urgent action to fund the national security requirements of our critical partners. The United States has also enhanced our military force posture in the region to strengthen our deterrence, and we stand ready to move in additional assets as needed.
Well, let's bring in Youssef Gamaldin, our Daybreak Middle East and Africa anchor. So, Youssef, what are the developments in the last hour?
Well, Francine, we have a confirmation now that a missile was fired from Lebanon towards Israel. The IDF put out a tweet saying it was an anti-tank missile. They say that it was launched from a small town in the south of Lebanon, and this is along the demarcation line between Lebanon and Israel called the Blue Line, which was established back in 2000. We also understand from NNA that they've struck back, so the Israelis have already fired back with artillery shells. And this border area is very, very tense. We understand that for Hezbollah in the south of Lebanon, an escalation with Israel would come if a ground invasion took place in the Gaza Strip. So this might be a little bit of a warning ahead of that as the IDF conducts more airstrikes in preparation for a potential ground invasion. I'd point to the diplomatic efforts as well that are underway. The Secretary of State from the United States, Antony Blinken, is going to be in Tel Aviv, is going to be in Amman. We understand they're leaning on the Qataris to try and play a bigger role. But then within the ranks of NATO, you've got Turkey, President Recep Tayyip Erdogan, saying that the allocation of any U.S. military assets, additional ones in the Middle East region, specifically around Israel, is only going to lead to a massacre in the Gaza Strip. So we'll continue to monitor and keep you up to speed, Francine.
Youssef, thank you so much. Youssef Gamaldin there with the very developments, the latest developments. Now, the unfolding conflict is, of course, certain to dominate conversations here in Marrakesh at the IMF World Bank meetings. We're joined by Arnab Das. He's global market strategist at Invesco. I saw Arnab also yesterday. We were traveling together, so it was good to catch up, Arnab. It's been way too long, and if you look at the markets, they're a little bit all over the place. It's extremely difficult to, of course, trade geopolitics. But they're also latching on to what higher for longer, I guess, means.
Yes, absolutely. Look, I think the geopolitics, it's a lot of uncertainty. This thing came out of the blue. And I suppose at the best of times, it's hard to trade geopolitics in the short term. I think what you can do is take a step back and think about the bigger picture in the geopolitics and, as you say, in monetary policy and what all of that means. So look, I think these events probably put the Fed more on hold than otherwise. I guess, that was already the direction of travel, judging by the comments, is somewhat dovish. I would say, taking the monetary policy by itself, the tightening in financial conditions that came from the summary of economic projections and the higher for longer, the Table Mountain versus Matterhorn kind of metaphor, that's one thing offsets the other, right? If financial conditions ease back, then presumably a bit of rate tightening comes back into the picture. The new war, probably tightens financial conditions over time through oil, through potentially general risk-off, because there might be more countries drawn into the conflict, as you're sort of starting to discuss about Lebanon.
So, Arnab, do you think overall we're near peak rates? And actually, even at like 5.5, let's say 6%, if they were to hike more across the world, what breaks in the markets?
Look, I think we are sort of at the peak in rates. I'm sort of more in the kind of plateau camp rather than, this kind of idea of a peak. I would say, things are less likely to break, famous last words, right, this time around, because I don't think there's been the kind of extreme leveraging up that we tended to have when we had very easy monetary policy from the Fed and others. I'd say we had zero rates and negative yields in many places because there wasn't much leveraging up. Right? So I think the chances of breakage are different now and probably somewhat lower than in past tightening cycles. I think, we've seen this small regional banks in the U.S., but those were interest rate problems they had, not credit problems, right? So, which I think is reflective of the fact that, this recovery is sort of income generated and savings generated rather than credit binge.
So, Arnab, you're a markets guy. What does this cost of credit and the fact that it's actually changing, and it could have implications for private markets and certain parts of, commercial real estate and things like that could have been over-leveraged. But what does it mean for where you want to be invested in?
Look, I think you want to be, much more diversified than usual because of all of these things. Normally, you'd say, if we're heading into something breaking, if we're heading into a recession, if the curve has reached its peak level, you probably want to be sort of increasing duration. And I think there's a good argument for that, but I think it's very unclear because of the resilience of the economy. So rather than concentrating your portfolio in a kind of recession-oriented or significant slowdown-oriented move, I think you probably still want to have some risk rather than be sort of tending towards a kind of doom and gloom view of the world, despite everything that's going on.
But how do you measure that risk? And I don't know what you do with China. So a lot of people are excited. We just heard from Janet Yellen. I think she's taking questions at the moment. She's, I'm told, at a university not far, actually, from where we are here at IMF headquarters. But it's the first time that we hear from the PBOC governor. And again, it's unclear how much they can manage this huge economy.
Well, look, I think, they are sort of doing the right thing, in my opinion, which is to ease, but not to ease excessively and not to sort of try to set off another or run the risk of setting off another big credit binge. So I would say, China, for choice, is probably a more bond-friendly environment than the West. And I think this is a case of this diversification, right? You have the two biggest economies, one sort of still at the early stages of an easing cycle, and the U.S. probably, as we're discussing, at the end of its tightening cycle, right? So you have two big poles in the world pulling in the opposite direction. It says to me, we've been in an environment where people have been, contrary to theory of finance, right? We've been concentrating in the U.S., concentrating in duration, concentrating in technology. That's what we've all been doing for the last decade or so. I think now it's time to spread your wings a bit.
So what does it mean for treasuries?
Look, I think treasuries would probably, in my mind, we've probably seen the peak in yields. Maybe there's a bit more to come because of the resilience. I don't think I would, position myself to expect, again, zero rates, very low yields, negative yields in Germany. I think, we have too much fiscal, we have too much, supply chain stuff, a lot more capex physical for the transition, for the geopolitics, security, inequality, all these things. We're going to have a much more active sort of economy and state. So I think, yes, yields have peaked. I wouldn't expect, massive collapse in yields here.
Arnab, thank you so much. As always, Arnab Das, their global market strategist at Invesco. Now, coming up, we'll have plenty more, of course, from Marrakesh, including the IMF's Gita Gopinath and the South African Reserve Bank Governor, Letseya Kanyago. They're coming up shortly, and this is Bloomberg.
Obviously, we were trying to create shoes for me to wear in the Olympics, and that was happening pretty quickly. And then just understanding a new industry and how shoes are even made. But as we went down that path and started to just learn and research more, we learned that shoes have not been made for women. What that means is a shoe is made off of a last, which is a mold of the foot, and it's the mold of a man's foot used to make women's sneakers. And I think it took time for us to really grasp that because, we've been in shoe stores and we've gone to the women's section and it's like, no, there are shoes for women. Like, what's this over here? And then to really understand, like, all of that is marketing. This is just a man's shoe, like, in a different color. And so that kind of eye-opening experience was just like, okay, we got to do this. And even more than making the shoes, like, there's a deeper purpose here. Like, women deserve better, and we shouldn't be an afterthought.
Not selling the Patriots, you're not selling the packaging company. I guess you don't like to sell things, right?
I really don't. We try to create a family environment in everything we're involved in. People want to be part of something that's bigger than themselves.
From New York City.
From London, in Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside? Welcome back. We're here at the IMF World Bank meetings, and you're looking at live pictures of Janet Yellen actually speaking at university, not too far from where we are in the center of Marrakesh, taking a lot of reporter questions. I believe actually that's even our own Washington correspondent asking Secretary Yellen a question. Now, she's been speaking for about 10 to 15 minutes. Of course, a lot of the focus has been on the U.S. economy, on China, and on geopolitics. A lot of the focus, of course, on geopolitics and the terrible loss of life in Israel and Gaza. So underlying all the economic forecasts is a question, how does the Israel-Hamas fighting add to geopolitical uncertainty? Now, in the last couple of minutes, Janet Yellen has said that nothing is off the table. They're not taking anything off the table on Iranian sanctions. She was also asked a couple of questions on U.S. and the economy, saying a U.S. soft landing, not a sure thing, but a most likely path. Now, there is one person that we haven't heard from very much since he became PBOC governor, and he is here in Marrakesh at the IMF World Bank meetings. Now, that will be extremely interesting. And Janet Yellen also says that it's one of the first times that they will speak face-to-face when I think they meet just in a couple of days. A couple of other things that we heard from Janet Yellen is her talking, of course, about, again, Iran. She's still going back to Iran, saying that they have not in any way relaxed sanctions on Iranian oil. Now, we'll have plenty more throughout the day here from the IMF World Bank meetings. I'm also looking forward to our conversation with Geeta Gopinath. We'll talk markets. We'll have a look at what we could hear from the Fed minutes a little bit later on. Again, if you put everything into context, it's a very complex world that a lot of participants here, a lot of finance ministers and central bankers have to unpack. We'll be right back, and this is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability. And so they are looking at brands that are greener, but you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
The boundaries of the entertainment world are blurry, and they're all scrambling for the same thing, screen time. And navigating this multiverse is no simple task. At Bloomberg Screen Time, it's culture, business, converged. Bloomberg Screen Time, Naya Studios, Los Angeles, October 11th and 12th. Get your tickets at BloombergLive.com/screentime.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
President Biden speeds up military assistance to Israel. Turkish President Erdogan criticizes the U.S. for sending warships to the region as the combined death toll tops 2,000. Treasury yields drop by some of the biggest margins this year on hopes that the Fed could be done raising interest rates, and LVMH slumps on disappointing third-quarter sales. More evidence that the post-pandemic luxury boom is actually real. Now, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here with special coverage from the IMF World Bank annual meetings in Marrakesh. Now, Lebanon's state-run NNA news agency says 2 missiles were fired from Lebanon towards Israel in the last hour. President Biden says the U.S. is speeding military assistance to Israel following Hamas's surprise assault. Meanwhile, the U.S. National Security Council spokesman John Kirby says that there's no evidence to show direct involvement by Iran in the attacks over the weekend.
We have not lightened any of the sanctions. In fact, we've added additional sanctions, some 400 sanctions on Iran just since the beginning of this administration. And we're absolutely committed to full and total enforcement. Now, obviously, other nations have to enforce their sanctions as well, and certainly we talk with them about that. But the United States has not backed off on any sanctions. Quite the contrary, we've added and increased our enforcement capability.
Now let's pivot to the outlook for the world economy. And the International Monetary Fund has lifted its global inflation forecast for next year and called for central banks to keep policy tight until price pressures ease. Well, joining us now is Geeta Gopinath, the IMF's first Deputy Managing Director. Thank you for joining us. There's a lot going on, especially geopolitics, that really have taken everyone and shocked to the world on both sides. What do these mean for the world economy or for countries in the region that could be particularly vulnerable?
Firstly, pleasure to join you as always, Francine. It's a terrible human tragedy what's happening, the Israel-Gaza conflict, and we really hope there's a quick, peaceful resolution to this. In terms of the economic implications, it's a little early because we have to see how this conflict unfolds, whether it draws in other countries. What we know, for instance, is that if it turns into a wider conflict, say, and that causes oil prices to go up, that does have an effect on the economies. When you look at the numbers, suppose oil prices, say, went up by around 10%, then about 12 months later, you see inflation going up by around 0.4 percentage points. Global output is lower by about 0.15 percentage points. So it can have these kinds of effects, but again, it's too early to tell exactly what's going to happen because we're still in very early stages at this point.
Are there any countries that you see as particularly vulnerable if it escalates? So we're talking about maybe Egypt or others that you're monitoring closely or closer than others?
I mean, countries in the region, like you said, are going to be more directly affected than the others. But if you look at what happens in terms of the effect on energy prices, that can become very widespread. And that's usually one of the big channels through which we see that affecting global numbers.
Do you think there's complacency amongst leaders in general about what kind of quality economic growth they get?
It depends on the country. We're seeing all kinds of countries in different places. In terms of our forecast, for instance, we have the US doing well in terms of resilience. Euro area, some countries in there, we've had downgrades. China, we've had downgrades. India, we've had an upgrade. So it's varying in different parts of the world. I think it's important for all governments to realize that we are in an environment of high debt, record high debt, very high interest rates that are going to stay high for a while. And therefore, it's very important to prioritize your spending, make sure that your revenues are keeping up with your spending needs, because it's not going to be that cheap to be able to finance just through debt.
There's a lot of, I guess, markets that believe central banks are almost, one and done, if not done yet. And it was interesting in your economic outlook in saying you have to make sure that inflation is under control. Is this the biggest risk to the global economy, that the central banks think they've won the battle before it's actually over?
I think central banks have done a good job in terms of raising rates sufficiently to be able to bring inflation down. So the question is not so much about whether they need to raise rates more. I think in many countries the question is about staying tight for a long time. It's going to take time. It's not going to happen overnight, that bringing inflation back to target. So while there's been good progress made on inflation, the job is not done. And therefore we are emphasizing that it's important for central banks to keep their eye on the data, calibrate appropriately, but make sure that you're bringing inflation back down to target.
When you look at the world economy and analyze it, financial conditions, of course, is a big component of it. Do you look at the cost of credit and financial conditions, or do you have preferred indicators?
We look at many indicators. We look at credit growth, we look at risk spreads, we look at different forms of pricing of risk. What has been interesting is that despite this very sharp increase in interest rates that we've seen, we haven't seen major risk-off events around the world, especially if you look at spillovers to large emerging markets. That has not been the case. I think they also deserve credit for having developed stronger a policy toolkit over the last couple of decades. So financial conditions have tightened. We saw some disorderly action back in March. Things are better now. But with interest rates at the levels that they are now, again, there's no room for complacency. You have to make sure supervision and regulation is up to speed.
There's a lot of concern actually about emerging markets and some of the global debt levels that we're seeing. Is there any action that they can do now to make sure that it gets better before it gets even worse?
Yes, it's absolutely critical for you to sit down and say, well, these are the kinds of expenditures we need to prioritize, and these are the kinds of revenues we need to make sure we get. Expenditures that pay for themselves are the best, which means you invest in education, in health, critical public infrastructure, that help also with the green transition. These things generate revenues that help you pay for it, and you don't have to rely on very costly borrowing. But there are countries that will require debt restructuring, and we've seen low-income countries who need to go through debt restructuring, and it's important to do that in a timely manner. We're making progress. The global architecture is making progress in getting these restructurings done, but still, it's not exactly where it should be. And that's one of the big aims of this week, is to be able to have a more efficient global restructuring process, debt restructuring process.
And there's an important roundtable actually on global debt restructuring. What are you concretely expecting from that?
Yeah, so the IMF, the World Bank, and the G20 presidency came up with the Global Sovereign Debt Roundtable. What the novelty of it is that we brought together Paris Club creditors, and the new official creditors like China, India, Saudi Arabia, private sector creditors, and the debtor countries around the table to discuss about how can we deal with technical issues that seem to slow the process of debt restructuring. I think we're building trust. We're coming to a better understanding of how we can do comparability of treatment. There are these technical details, but they slow things down quite a bit. We're going to be able to announce that we're making progress on several fronts. And this is important because it really complements the common framework, the G20 common framework, which is where you have the creditor committees. And this helps them end up with a more efficient resolution process.
Do you see more global coordination, or at least a wanting from a lot of these leaders to come together? I know that in the last 2 to 3 years, there was a lot of people saying we want to come together, but then it was each for their own.
you know, I think we have conflicting forces, right? There's clearly a need for us to come together on debt, on climate. We need to trade. I mean, countries have to integrate. That has been a big, you know, boon for countries around the world. But at the same time, we are in a geopolitical environment where there are disagreements, and so that complicates things. But you know, one of the reasons we're all here is to have closer cooperation.
I guess a lot of these concerns that you lay out are also seen in trade numbers. Does it get worse before it gets better? I know we've talked about this for years, globalization or anti-globalization movements, but where are we?
Well, if you look at the number of trade restrictions, Francine, we had 3,000 new trade restrictions just last year. That's like many multiples of anything that we have seen. So let's not kid ourselves. We certainly are in an environment where countries are placing more restrictions on each other. There are, you know, subsidy wars in terms of who, you know, quid pro quo, tit for tat. We are seeing that happening in the world. We really should make sure that this doesn't end up with all of us, you know, just turning inwards completely and a huge return to protectionism. We have to stop that from happening. Not going to be easy. I think it's important for us to have these kinds of gatherings where we communicate, we point out the risks, the costs to households and to businesses from these kinds of policies. You know, again, I want to stay hopeful that we can arrest a big decline.
Janet Yellen was also saying, so she's meeting the PBOC governor, the first time that we really, a lot of people will get to meet him in person since he's been appointed. What are you expecting from China?
China is in a difficult situation with respect to their economy. We've downgraded their growth for this year and next, 5% this year and goes down to 4.2% next year. And in the medium term, we're looking at 3.4%. So growth is slowing, multiple factors. The property sector is an important one, the crisis there that matters. There's a lot that needs to be done. I will also be meeting the governor through these meetings and to learn from him about how he sees the outlook. They cut interest rates. I expect they will need to do more, but much more action needs to be done in terms of addressing the property sector problem.
Geeta, thank you so much, as always, for joining us. Geeta Gopinath, the IMF's first Deputy Managing Director. Now, coming up, Letseya Kanyago, the Governor of the South African Reserve Bank, will discuss, of course, the country's persistent inflation and whether another rate hike this year is on the cards. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Now let's take you to Brussels and to NATO headquarters, where the U.S. Secretary of Defense Lloyd Austin is speaking at headquarters. He's addressing members of the Ukrainian Defense Contact Group, an alliance supporting Ukraine invasion, or Ukraine against the Russian invasion. Now, the Ukrainian President Volodymyr Zelensky is also at the meeting. He's actually on the left-hand side of the Defense Secretary. He comes ahead of a NATO-Ukraine Council later today, where NATO's Secretary General Jens Stoltenberg will speak this afternoon. One of the big questions, of course, that remains is if everything that's going on in Israel and the Gaza Strip impacts the war also between Russia and Ukraine. Now, inflation remains above target in South Africa, with food and oil prices driving upward pressure. Although interest rates are elevated, Bank of America predicts one further hike this year to rein in rising prices. Well, joining us now here in Marrakesh for the IMF World Bank meetings is Letseya Kanyako, the governor of the South African Reserve Bank. Thank you, Governor, for joining us. We always have this biannual meeting to try and figure out what you worry about the most in your economy. What's inflation looking like?
Inflation is remaining elevated, although it has come down. It is at 4.8%. It went all the way to 4.7%. We would still want to see a number of readings that would suggest that inflation has declined sustainably towards our target, which is the midpoint of our target range at 4.5%. There are risks to the outlook, but we expect that we would only sustainably be on target in 2025. But as you were pointing out in your intro, there is a risk from oil prices, there is a risk to food prices with the possibility of an El Nino. Global financial conditions are tighter, and as a result of those tighter global financial conditions, there had been a repricing of exchange rates, and the South African rand was also no exception, and those remain a risks for us going forward.
But Governor, I think your last monetary policy meeting was September 21st. So since, have you had or seen signs that inflation indeed is going the way you want it, which is a trend downwards?
We haven't had a new reading since that. The most recent reading was the 4.8 that we talked about. The risks, the world is a very uncertain one at the moment. There are so many moving parts, and what I can say to you is the job on the inflation front is not yet done. And so we remain vigilant, and we stand ready to deploy our tools as necessary.
So what does that mean for interest rate hikes?
Well, what we should be asking is what it means for inflation, which is what we worry about. So we only deploy interest rates because we worry about the inflation outlook. And we have taken steps consecutively from November 2021, and July and August was the first time that we had a pause. And as I had said, the arrival of two swallows does not mean that the summer is here. We have got to see a lot more swallows in the sky, meaning that we must see a lot more inflation prints that are consistent with a declining inflation that converges to the midpoint of our inflation.
I understand, and you're right. And I understand it could also be frustrating for central banks to keep on being asked about monetary policy, where you're just looking at the reaction function of higher inflation.
Monetary policy is exactly the trait we apply, and so it's correct to ask us about monetary policy, but we also do not have a crystal ball. We're faced with this uncertainty, and that is why when we say that we have paused, we think inflation is going towards the midpoint of our inflation target range, and we have had a pause. We had outlined that there are risks. Should this risk indicate that they could be materializing, we would then have to act to deal with that.
But Governor, you're far too clever not to have a hunch of what your next move is. Could it be a hike or a hold?
Well, I am 1 out of 5, so it doesn't matter what my hunch says.
Matters to us.
No, at the end of the day, it's going to be what our collective assessment is. There is going to be a number of data points that are still going to be read. We are only moving towards the mid of October. Our meeting is towards the end of November. So we have quite a bit of time. We would assess that and look at the outlook for both inflation and growth and recalibrate policy as appropriate.
And of course, you'll have a chance to look at what the Fed does, which also has implications for the currency.
I thought the Fed looks at what we do.
Which they do, I'm told, by a reliable source.
No, emerging market central banks, to be serious, started the journey much earlier. And that has given us the room, and that is why where there had been downward adjustments in interest rates, it had been in the emerging market universe. That is not where South Africa is at the moment. We believe that the adjustments in policy that we have done so far have us at a level that is appropriate. There are risks on the horizon. We would have to continue to watch those. The Fed's decisions feed into what we look at, because they could, if they decide to tighten further, and our baseline is again higher for longer. But if they adjust and thus global financial conditions tighten, you are going to see a realignment of exchange rates globally. And at the moment, the dollar had been strong relative to so many of the currencies. And for us, we would watch that, and as we had said, one of the risks to the inflation outlook has to do with exchange rate.
Governor, to put it simply, if the Fed hikes again before the end of the year, will it make it harder for you to stay on hold?
Whether we stay on hold or we adjust rates further depends on what our own inflation outlook is, rather than what the Fed has done.
I understand. What's your biggest concern out there right now in terms of multiple challenges to what you're dealing with?
Well, firstly, tighter global financial conditions. Secondly, that oil prices remain elevated. There are a lot of geopolitical risks that could impact on the oil price. Third, the threat of an El Nino could reverse the disinflationary path that we had seen with respect to food prices. And lastly, the tighter financial conditions leading to a depreciation of the currency, our domestic currency, could feed into inflation. And we constantly watch those risks. And again, if we think they would materialize, we will adjust policy as appropriate.
Governor, thank you so much for your time. As always, that was Letseya Kanyago, the governor of the South African Reserve Bank, joining us this morning from Marrakesh at the World Bank IMF meetings. Now, coming up, we talk luxury with LVMH shares slumping after reported slower sales growth, driving French stocks down, to underperform. We dig deeper into the luxury story next, and this is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
This is Bloomberg.
Well, trouble for LVMH. The shares are slumping following some pretty disappointing third quarter sales. Now, Bloomberg's Angelina Rasquet, who covers EU luxury goods, joins us from Paris. Angelina, good morning. So is this really evidence that the post-pandemic luxury rally is over?
Yes, indeed. It seems that the post-pandemic euphoria that we saw for luxury goods seems to be over. I mean, LVMH showed that demand was still up, but it's growing at single digits instead of growing at double digits. The question mark is now what happens to the rest of the players. Hermès reports at the end of the month. Generally, it's considered a resilient player because demand for its handbags generally outstrip its offer. Kering, it's slightly different because its biggest brand, Gucci, has a new creative director. He just unveiled a new collection last month in Milan. The products, his creations will only be on sale in February. So two different situations there for two luxury players.
Thank you so much, Angelina Rasquet, there with the very latest, of course, on VLMH. You can see LVMH down 6.5%. Now, on to geopolitics. An Iran-backed Hezbollah says it's fired guided missiles towards an Israeli army post. Meanwhile, Lebanon's state-run NNA news agency says 2 missiles were fired from Lebanon towards Israel in the last hour. Now, the Israel-Hamas war is entering its 5th day, with combined death toll approaching 2,000. Coming up in the following hour, Bloomberg speaks exclusively to the former Bank of Israel governor, Karnit Flug. That's at 10:10 London time. We'll have full analysis, of course, also hear from the IMF World Bank meetings, including our exclusive interview with the Citigroup chairman. That's John Dugan, and that's up shortly. Up next, Bloomberg Brief with Danny Berger in London, Manus Krani in New York, and this is Bloomberg.
we've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that, this is something that, many business leaders are focused on, and, time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Names in global leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
Slice through the noise. Forget the noise. Ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
President Biden speeds up military assistance via full support for Israel. The world remains on escalation alert as missiles are fired from Lebanon. Treasury yields post some of the biggest single-day declines of 2023 as a host of Fed speakers boost expectations that the central bank is likely done raising rates. We're live in Morocco as the IMF meetings ramp up against a backdrop of escalating global conflict and debt distress. U.S. Treasury Secretary Janet Yellen spoke earlier.
I'm not saying that a soft landing is an absolutely sure thing, but I do continue to think it's the most likely path. But are there risks to this outcome? Of course there are, and global shocks are among them.
Janet Yellen there speaking in the past hour. A number of factors have come to light. She still sees a soft landing, but the moves in the bond market over the past hour are perhaps what the market is most interested in. Equities, for the moment, remain in the green. By the way, you are looking at green across the screen. S&P 500 is up. That drop in yields has given permission for money to flow further into equities, even if you have your doubts about what's coming down the pike. We'll hear from the Fed, the minutes a little bit later on today. Maybe the narrative from that will be about growth. I can tell you this, Europe had its best day of 2023, up 2% yesterday. We carry through on that. But again, this soft landing is the playthrough for the US equities. Louis Vuitton will be at the bottom of your screen. What you're going to see there is a stock which has wiped out 2023 gains. Why? Wine and booze, that component of LVMH has tanked by 14%. So So there is this concern within the rich sphere or the aspirant luxury that you're running out of breath. So it's a reality check on the sales disappointment. Is one of the biggest laggards in Europe and Asia. Asia has had 5 days of a winning streak. That's the best streak of 2023. But Barclays make the point that it is going to be resilient earnings that help you find a floor in these equity markets. Danny, good morning.
Good morning, Manus. And here I was thinking that booze was recession-proof. Look, you mentioned the bond yields coming in, helping the equity market. Let me show you them. U.S. 10-year yields now down more than 9.5 basis points. It happened over the past 2 hours, perhaps helped by the liquidity of the European Open. Fears of escalation as rockets come from Lebanon into Israel. More Israeli Air Force strikes coming into, all of that resulting in this haven bid. Brent, though, that did turn around. That had started this morning with gains that drops by about 0.25%. Gold, that haven bid clearly coming in. Same movement happened the same time we saw the bid coming into treasuries. Gold is up by 0.5%, lingering around the top levels of the month. Now, Manna, some quick facts on your 10-year yield. It's down about 23 basis points from the peak. And at the same time, we've gone to 60% odds pricing that we will not get a rate hike come December. But then you get warnings like from Citi saying that the term premium will move higher. The economy is resilient and there's a lot of supply.
Yeah, we've pivoted from what, a 60% probability of a rate hike last week to 60% probability of a hold in December. It is about debt dynamics to a certain extent. You have this huge move in treasuries because of the war in Israel and because of peak Fed speak, that rhetoric coming through from Logan, from Jeffries, and again from Daly talking about a new neutral rate. More of that in a moment. The IMF warn about the debt dynamics as being unfavorable, and they talk about an unsustainable situation in the debt dynamics of the US. So that's the state of play with the IMF. More readout from Yellen and the IMF meetings later in the show. Well, President Biden is urging Congress to take action on Israel. He spoke at the White House yesterday.
When Congress returns, we're going to ask them to take urgent action to fund the national security requirements of our critical partners. The United States has also enhanced our military force posture in the region to strengthen our deterrence, and we stand ready to move in additional assets as needed.
Joining us now, let's bring in our head of Middle East and North Africa, Stuart Livingston-Wallace. Stuart, good to have you with us to dissect this. Who are likely the peace brokers? It's interesting. I would have thought it was Egypt, but it looks as if Qatar may well be in the framework of trying to deliver some kind of an off-ramp. Your assessment so far? Good morning, good afternoon.
Good morning, Mas. Yeah, I mean, Qatar got involved very early on in this process. So as we understand it, as early as Saturday, that was focused on what do we do about the hostage situation. There's an unknown number of hostages obviously still being held in Gaza. And given the troop build-up now around the border, the number of reservists that are being called up, there is a growing sense that we might be building up towards a ground war. Again, in a scenario where you have hostages on the ground, that is of deep concern. What's not clear so far is what success they might have had. Obviously, we're on day 5 now. There's no sign yet that we're going to get a resolution on that front. I would say the second element to think about is we've got Blinken coming into the region. He's going to be in several countries over the next days. But again, it's hard to know what he might be able to bring with him, bring to bear on the situation, given the events of Saturday and then obviously into Sunday as well, and the level of the casualties that we've seen. It's going to be very difficult, I think, to broker a peace here as such. In addition to that, you've got military assets moving into the region. You're starting to get a build-up coming from southern Lebanon. It's a very volatile situation.
Yeah, I mean, it is horrific at this point, Stuart. And as you mentioned, there's the fear of what comes from Hezbollah out of Lebanon, the Iranian-backed group. We did learn moments ago, Hezbollah saying, or Lebanon saying, that they did hit an Israeli military post with guided missiles. What is your assumption about further escalation given that development?
I mean, I think it's a risk, and you can't help but think that the US very clearly and publicly signaling that it was moving military assets to the Eastern Mediterranean was, in some sense, a very clear deterrence. Don't get involved, however things pan out. On the other hand, You've seen the population in southern Lebanon start to move out of those areas. You know, this is not an organized evacuation. This is people taking it upon themselves to get out of the area, you know, given what's happened over the last several years there. So again, you're getting a sense of a build-up in that area. So far, the rocket attacks have been relatively low level. We did get something of an incursion yesterday into territory held by Israel, but again, nothing on the level that we saw over the weekend in the south.
Yeah, well, we certainly heard from Erdogan as well in regards to these warships being deployed. He warns that the U.S. move could lead to massacres. So, as you say, Stuart, day 5, and a great many unknowns from hostages to the overall potential for a ground invasion. Stuart Livingston Wallace, Bloomberg head of Middle East and North Africa. San Francisco Fed President Mary Daly says the neutral rate may be higher now than before the pandemic, but won't be as much as 5%. She spoke at an event yesterday.
I completely could imagine that we go from 2.5, anywhere between 2.5 and 3 as the nominal neutral in the go forward, but that's 50 basis points, not, you know, 2.5 basis points, and 250 basis points.
Joining us now is Ella Hoya, head of fixed income at Newton Investment Management. Ella, thank you so much for joining. Look, at the moment, the market seems to be fixated on Daly and others saying the market's done our work for us. But there she is talking about a higher neutral rate. Should we be thinking about the Fed targeting a higher inflation target at that moment? Is that where the conversation needs to shift to?
Potentially. I think some of the attribution to the steepening in the curve at the very long end has been down to the fact that markets think in this cycle the Fed may not get to where it needs to control inflation. So there is some assumption they will allow a little bit more inflation that's been typically the norm, say, over the last 10 plus years. Very hard to say at this juncture. It's going to depend really how risky assets behave if indeed we do enter more of a recessionary period next year.
Ella, good morning. And you are wary of risk assets, and you have some salutary warnings about 2024. But I want to deal with the bond market right now. As Danny said, we're down over 25 pips from the high. We've seen this quite accentuated move on war and Fed rhetoric. What I'm trying to assess is whether this move is something significant and structural, believing the Fed, or is it all down to war and the reaction to the fog of war?
It's usually more than one factor driving these types of moves. You could also argue that markets had gotten quite short, certainly on the more fast type money, CTA positioning. We were quite extremely short, so very vulnerable to a rally. We've had 2 months of a sell-off in rates and, you know, with very good momentum, so it's quite natural to expect some pause to that move. Of course, the news out of Israel and the Gaza Strip is certainly being more supportive of rates, but also probably what put the nail on the coffin is this comments from the Fed, which would breathe a sigh of relief for markets, given everything is so much dependent on where this terminal rates argument goes. So absolutely.
I guess what I'm also trying to understand, Ella, is have we reached the ceiling yet? If we have this relief maybe coming from the Fed, the haven bid, does that mean we've already topped out?
Well, you're asking, a fixed income investor if we've peaked in rates. And we could argue yes, certainly because of the way risky assets were behaving as curves were pricing higher and sort of bear steepening move. So it is our view that even if we haven't properly reached that peak, we're not that far from it. So we're closer to the peak, as we said last time we were on the show. However, from an asymmetry perspective, bonds do look interesting here, right? Because there's more ways to make money than lose money in fixed income right now, certainly on the core government side. And so to us, that looks like closer to a peak argument.
But you are wary, as I said, you set out your stall, you are wary of 2024, and you also have a warning flag up over credit. You warn that this is where you get some carry, but little downside protection. Where are you most worried about in credit? We've got the corporate bond spreads in the GTV library for you. Are you more worried about Europe or US? Where am I least protected?
Right. Generally speaking, high yield markets, so the riskier buckets, there's quite a bit of idiosyncratic moves even within the high yield basket, but also in investment grade space, you're starting to see sort of the quality names demanding less premium in terms of yield relative to sort of the more riskier names. So the market's already telling you that it's getting a little bit more nervous. And if you think about the moves that we got in spreads, so both in IG and high yield space, over the last, say, 2 weeks, you unwound at least 6 months worth of rally for the year. So it tells you the market is quite sensitive. So I would say the riskier buckets to begin with and sort of the more risky names. Less risky in the short maturities in investment grade, certainly in the high quality names, but still some pressure there as well.
There's this really great research from Bloomberg Quant Team's Steve Howe, basically saying that part of the issue right now is the stock-bond correlation. I guess it goes for all risk assets too, like you were just discussing, that as long as that correlation is high and they're moving together, you're going to demand a higher term premium because bonds look like stocks right now. What does it mean for you to have this correlation between the two, for bonds not to give you that extra protection?
Absolutely. Very difficult for a global portfolio manager to be able to hedge away risks in the portfolio. So obviously you get a few instruments to do that, but it's much harder. So very difficult job whether you're in equities or fixed income. For example, in fixed income, that role has been played by the dollar. That happened last year, and commodities to some extent. And we've seen a reemergence of that tool as a hedging mechanism for portfolios. Now, going back to the correlation argument, it's an important one because that is not fully self-sustaining in the sense the more one way you move in both risky assets and sort of safe assets, so to speak, like treasuries, the more it becomes controversial in the sense there comes a tipping point where that no longer holds true, i.e. at some point treasuries do play their sort of risk-off type of action as they have in the past.
Do you think that's where we are now? Do you think that's the next phase because we have such open-ended risk? I put it out there yesterday is that it's as if somebody ripped open the on switch on a vacuum cleaner, sucking money into dollars. I know the dollar has had a little bit of a tough run of late, but you are just seeing this haven status of U.S. I suppose it's U.S. King U.S.
Yes, I mean, certainly in terms of the asymmetry I was referring to earlier. So, for example, in treasuries, if you sell off by 100 basis points from here, you could stand to lose a couple of percentage points. But if you rally, you could be making more than 12% total return in those bonds. So there's a good asymmetry. And the opposite would be true in equities, for example. So certainly there is an argument to be made that safety net probably is much better now in sort of core government bonds. Absolutely.
All right, Ella, thank you very much for joining us. We appreciate your time this morning. Ella Hoya there of Newton Investment Management. Now let's get to some other top stories that are trending on the terminal this morning. Exxon is expected to announce an all-stock bid for shale producer Pioneer today. It'll be worth more than $250 a share. That deal would value Pioneer at $58 billion or more. Now this would be the largest corporate takeover announced globally this year, Manus.
Well, Samsung shares, Danny, they rose today after the company's better than expected operating profit. That boosted optimism that the worst may have passed for the chip industry. Samsung posted a 78% decline in the third quarter operating income, smaller than what some of the investors out there had been expected.
Now, meanwhile, one of Sam Bankman-Fried's closest associates and former girlfriend, Caroline Ellison, has taken to the stand against him in court, alleging that he directed her to commit crimes that led up to the collapse of FTX. Bloomberg's Sonali Basak filed this report from the New York courthouse.
It's a critical moment in the criminal trial of Sam Bankman-Fried, the FTX co-founder that is being accused of defrauding investors. His former girlfriend, Caroline Ellison, who also ran Alameda, the hedge fund firm in question that allegedly siphoned hundreds of millions of dollars from FTX and its customers. She had taken the stand today. Remember, she had pled guilty to criminal charges and is cooperating with prosecutors. Ellison said that Bankman-Fried had directed her to commit such crimes, and she is further outlining the extent to which FTX and Alameda had cooperated with each other brother and use customer funds, including the creation of the FTT token, which many retail investors bought into. This is only the second week of a 6-week trial, and other testimonies could include investor Anthony Scaramucci, as well as Sam Bankman-Fried's own brother. More to come in this trial. From New York, I'm Shanali Basak for Bloomberg Television.
Coming up next, we have an exclusive conversation with the former Israeli Central Bank Governor Karnit Flug as the Bank of Israel works to contain the market fallout from the conflict with Hamas. And later this hour, we're live at the IMF annual meetings in Marrakesh, Morocco, with the Citigroup Chair, John Duggan, joining Francine Lacroix, right here on Bloomberg.
I was putting so much pressure on myself. And when I changed my mindset midway through the tournament and just approached it one game at a time.
Lloyd with Morgan streaking. She's chipping the goalkeeper. Off the post and in. Hat trick for Lloyd.
I went from really just being under the radar to suddenly being in the spotlight.
You know who I'm talking about. Carly Lloyd. Carly Lloyd. Ladies and gentlemen, we have an American hero.
I had speaking engagements, sponsors that wanted to sign me, appearances, you name it, I had it. It became very mentally draining for the next easily couple years because I was extremely busy. But I knew that if I'm going to have any type of retirement, any type of financial stability when I'm done playing, I had to take every advantage of my opportunity.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close
A lot of this was priced into the U.S. session.
to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
This is Israel's 9/11. This is Israel's 9/11, and Israel will do everything to bring our sons and daughters back home.
Israel's ambassador to the UN, Gilad Erdan, speaking on Sunday. Joining Danny and I now is Karnit Flug, former governor of the Bank of Israel, vice president of research at the Israel Democracy Institute in Jerusalem. Professor, good morning. Thank you for your time. We've just played you that line from the UN ambassador that this is Israel's 9/11 moment. You've worn many different caps in Israel. You are in Jerusalem now. How would you define this 9/11 moment for Israel from your perspective? Good morning.
Well, I think currently, really, there is a state of shock and terrible sorrow about the horrors that we see on television, the massacre that took place in our communities near the border. And there is a great concern about what's coming. There is a great uncertainty about the unfolding of the war. I would say that the only silver lining is seeing Israel is really mobilized and coming together, volunteering on every front, including to reserve duty. So this is really the state of affair right now, and great uncertainty about what's coming.
Yes, I mean, we have to in these moments look to those silver linings sometimes, Professor. And look, I know you also started your career at the IMF. We're in this moment where the IMF is meeting today in Morocco. What does Israel need, not just uniting the country itself, but from the global community? What is necessary in terms of response and aid?
Well, I would say first that right now for Israelis, the state of the economy and the economic consequences are not what is on the mind of Israelis. Now, I think what we do need is support. I think what we've seen yesterday in the speech by President Biden was really heartwarming in terms of the support for Israel at this very, very difficult time on all fronts.
We're trying to understand what happens next. I don't think anybody really has a full grasp of that. We've just had some additional news this morning on missiles coming in from Lebanon. There's talk of a full-scale land invasion. I now want you to turn and try and put in perspective economically the impact. We don't know how long this war will endure, but from Israel's perspective, how much risk is there now to the economy? How much risk is there to the outlook?
Well, if we look back at previous wars, you know, the economy will probably have a big blow, but at least in the past, it had recovered very, I would say, rapidly and strongly. But of course, the extent of the damage to the economy will depend on how things unfold and how long this war will be and how broad it will be. So we will see definitely a very sharp decline in some sectors. First of all, tourism, private consumption, investment, and some of these effects are prolonged. You know, if we look back at the second Lebanon war, there was a very sharp decline in the last quarter of 2006, but then an as stronger recovery by the next quarter. But it's very hard to say, you know, whether what we're going to go through now will be of the same order of magnitude. The number of reservists that have been drafted is much larger, and we don't know the scale of the war that is coming.
So to that point, Professor, we have seen, of course, the shekel was somewhat stabilized from the action of the central bank, but there were credit default swaps which spiked. Last you were with Bloomberg, you spoke to Manis, you warned about the credit rating with the judiciary upheaval. Is the credit rating now even severely more under threat with now Israel at war?
It's very hard to say because on the one hand, I think my guess is that the judiciary reform is off the table now. So in that sense, that risk is over. But obviously the geopolitical risk seems to have intensified. So it's very hard to say what would be the reaction of the credit rating agencies. I have to say, though, that our financial institutions have exhibited resilience over the last two significant shocks. They're very well capitalized. They're very tightly regulated. So I think in terms of financial stability, we are okay. And also, I think the way the central bank reacted, it has demonstrated that it has the ability to really react swiftly to the shock and to ensure the functioning of all markets. So in that sense, I think we are okay in terms of the financial markets and financial developments.
Professor, can we just pick up on that? The central bank obviously defended the currency. I think in their statement, they said that they had sold as much as $30 billion. Now, we don't have the final number. That's no small amount for an economy the size of Israel. I know there's nearly 200 billion of reserves. My question to you is, you said that they acted well and held the defense of the currency. Do you think they're going to have to do considerably more intervention than that? Will the market test? If there's a full-scale ground invasion, if there is a serious escalation, as Hezbollah claims that they have fired on Israel, if there's major escalation, do you think that they will have to intervene again in size?
Well, they said that they will sell up to $30 billion. That's a huge amount for the market. And I think that was enough to calm the market. And I'm sure, given the size of our reserves, I think that if there will be a necessity for more, they will do more. They said also that they're willing to inject liquidity of $15 billion. So I think it should be enough. And if there is more needed, I think we've seen that actually just the announcement was enough in order to calm the market, the foreign exchange market.
With that in mind, you talk about the swap. $15 billion of swap mechanisms have been created, Professor. I suppose what goes through Danny and I's mind is that's a reassurance. In times of high crisis, swap lines are incredibly important. How much more detail do you want, or does the market need, in terms of the Fed's participation in these swap lines, or what additional swap lines are available globally? Is that a psychological defense that can be bolstered?
I think that it's not necessary for the moment. I think, as you mentioned, that there are $200 billion of reserves. It's a huge amount.
Term comes to an end in December. How important is it in this moment of unknowingness, of war, of necessary stability, that he stays on?
I very much hope he stays on. I think that would be the best demonstration that the government wants a strong and independent central bank. So I think that could be a very important step to demonstrate that.
There's also been discussion at the political level that a coalition needs to be built. How important is it for the country and for continuity, stability, confidence that a coalition government is formed? Is it something that you would vouch for, call for, support?
I think generally unity at this very difficult time is called for, but I won't get any further into that.
Fair enough. Now, you did mention some of the concerns when it comes to the economic impact. Again, just when we're trying to understand the contours and the natures of it, there were concerns on FDI already previously to this. Again, concerns about what's happening with some of the government, some of the judiciary reforms. How crucial is that FDI conversation right now?
Well, I think it's hard to think about it right now. We're in the middle of a crisis, and I think that we will have to see how we come out of it. Again, in the past, the extent of the damage to the economy of a war that has not been long has not been very severe, but it's very hard to say that the past can teach us about what will happen now, given the uncertainty about the severity, the length, and the contours of this current war.
As you look at the landscape, we are in day 5. There are escalations around further attacks. From an economic and from a monetary policy point of view, what is the biggest risk now?
I think looking at the financial stability, Israel, because of the strength of our institutions and our very active central bank, I think we're okay. I think there may be a longer-term damage to the economy. It will depend on the extent and the size and what happens in terms of the war, but also on the reaction of the government later on. I think at the moment it has to allocate all the necessary resources to finance the war and to finance the reconstruction and compensating people. And as soon as this is over, I think the question will be where we're going from there, but we're not yet at this stage asking these questions.
Professor Flug, we know that this is a moment of hardship and heartbreak, and we really appreciate your time with us today. That's Karnit Flug, former governor of the Bank of Israel. Thank you so much. All right, as we take an overall step, a step back from this, the concerns are indeed proving to be a haven bid into this market. But it does go further than that. We've had, Manus, a lot of central bank policy comments from Daly, from Logan, of course, who is a hawk herself, saying that the market might have done some of the work for it. So you do see 10-year yields coming in about 8 basis points. Gold, that is surely proving to be a haven bid, up about 0.5%, while Brent crude drops, Manus.
Well, there's no doubt about it. That drop in the bond yields on the back of those new headlines, the alert that Hezbollah claims to have fired a missile into Israel from across the border in Lebanon, that brought yields down. Does it bolster the equity story? It's still very, very early to say. But what you have got is, again, money flowing into U.S. equities. And with that in mind, Danny, it is the yield drop that gives some succor to the equity story. As far as Europe is concerned, we had one of the best days of 2023 yesterday, Danny, up 2%. We build on that. We're now up 3% in 2 days. Asia is on a 5-day winning streak. So you are just seeing a real momentum there. Europe building on yesterday is a 1/10%. LVMH is also very much in our sight line. The CEO said, look, we can't do 30% growth every year. I mean, wines and spirits dropped by 14%, Danny. So the 2023 gains for LVMH have now been wiped out. Danny.
Yeah, and Manus, we're going to head to the IMF shortly. But again, I do think it's remarkable. They're warning about future deficits. 2% of gross domestic products, that's what they expect them to be. That is also something that is weighing on this bond market.
Look, this is the narrative that was before this war. If you think about it, it was deficits and supply. And those were the two biggest, I suppose, headwinds to Stephen Major's call, his bullish call. He said, I was wrong, but I was wrong for all the right reasons, all the way up to 4%, then 5%. So as it stands right now, Danny, it looks like these bonds are behaving as those hedges in times of sheer terror.
Right. Well, let's head to Morocco now, where we got those warnings from the IMF meetings. And those meetings are ramping up against a backdrop, as you say, Manus, of escalating global conflict and debt distress. Treasury Secretary Janet Yellen spoke earlier on her outlook of the U.S. economy.
I'm not saying that a soft landing is an absolutely sure thing, but I do continue to think it's the most likely path. But are there risks to this outcome? Of course there are, and global shocks are among them.
We now go live to the IMF meetings with Bloomberg's Francine Lacqua, where she's standing by with Citigroup's chair. Francine.
Yeah, thank you so much. I am delighted to be joined by the chair of Citigroup. He's John Dugan. Thank you for joining us.
My pleasure.
It seems like the world is fractured, geopolitics, economically. It's very difficult for leaders to almost get on the same page, get along, and find a solution. After the horrific weekend that we've had and the 5 days of fighting, what does all of this mean for a big global bank like Citigroup?
Well, first of all, it means we focus most on our people on the ground in Israel, this senseless act of violence by the terrorists. And our hearts go out to our people, and we stand by our people. Thankfully, they're all safe right now. But that is our biggest, most important focus. And of course, we're monitoring and continuing to serve our clients, but it's our people on the ground that are first and foremost.
Could it change, actually, the world economy as we see this potentially escalating?
Well, we certainly hope not. We're watching it closely, and of course it's already affected oil prices and commodity prices. But I think we're all just going to have to see how much this expands or not over time. We are in the ground in the region and other places in the world, and so far it is pretty contained to where the conflict has been. And that's certainly what we hope continues.
John, when you look at what your CEO has been putting in place, the restructuring, the big changes that Citigroup is going through, where do you end up in 1-2 years in terms of the bank?
So this is something that Jane has been very thoughtful about and decisive since her very first time on the job. We had our investor day very soon after she started. and really laid out this vision for simplifying the bank. It had already been on a path like that, but to really much more simplify the bank and to do, starting out with divestitures of our non-U.S. consumer businesses, which we had all over the world, particularly in Asia, and that's well along now. And then secondly, in spending a good bit of time transforming our risk and controls and the operations and technology, supporting them, and really getting that underway. And this is what I would describe as the third leg of that stool of change to simplify the company, and it follows from the other two. So, for example, by getting rid of and divesting all these non-U.S. consumer businesses, we don't need the same significant geographic managerial layers that otherwise were there. So it's getting rid of those, and likewise bringing the core businesses closer to Jane. So in 2 years, and I am getting to the answer to your question. In a couple of years, I think we believe it'll be a much simpler bank.
Right.
Our expenses will go down, our revenues will go up as a result of being simpler, and I think you'll really, despite this great investment in what we're doing in the transformation, those costs will begin starting to come down at the end of next year.
Is there a little bit of a bumpy road? I know you've also, for example, sold a big chunk of a China unit to HSBC. Does that impact your ability to service clients in the shorter term?
No, not at all. In fact, it's a very smooth transition that we're going through. And we've had now coming on 9 closings of non-U.S. consumer businesses. I'm pleased to say those have all gone very smoothly. And we've gotten good premiums for the ones that have closed. And then in some other cases, we've had to engage in wind downs of the business. China's one of them. But this marks the ability to smoothly sell a chunk of the business. So I'd say all of that's going very well. And our business that remains behind, which is our core institutional business that we have all over the world, that's operating very smoothly. And this is not, in fact, it's making it easier rather than more difficult.
Because of the changes in restructuring, do you have a final number of job cuts?
No, we don't. I think one of the interesting things about Jane is she's quite decisive about the direction she wants to go, but she's also very specific about doing it in the right sequence. This is not about hitting a number. It's about making sure we get the roles right to simplify the company, to get the most efficient business that we can get out of this. Those numbers will come over time, but we're not targeting a particular number at this time.
So because of changing U.S. regulation, Basel, again, what are some of the changes that you'll have to go through?
Well, the most significant thing with Basel and what's going on in the United States is a proposal to significantly increase capital requirements for the largest banks that, I will say somewhat bizarrely, is a response to problems that happened with regional banks in March. We believe that it is an unwarranted proposed increase, and not only because it causes us to have to hold more capital, but we believe it really will have a material impact on the amount of lending that U.S. companies can do generally, which is not a good thing when the economy is in more or less a precarious position, even though remarkably resilient. And it also pushes more activity, lending, and financial intermediation out of the banking system and into non-banks. And we don't think that's a good thing. We don't think it's a necessary thing. Our banks, our largest banks, including Citi, are very strong from a safety and soundness perspective in terms of capital levels, liquidity levels, and this is just unwarranted to have this huge excess amount of capital.
What are Citigroup's own relationships with regulators, of course, given what's happened a couple of years ago with some of the consent orders?
Look, I think we spend a lot of time trying to maintain a very constructive relationship with our regulators. And I think, I can't put words into their mouths, but I think they believe we are doing our utmost to comply with the rules and the consent orders that we're operating under. But ultimately, what they want to see and what we must deliver are results, execution results. We believe we are, and people will see that over time, but that's really what the core of the relationship is about.
You see a lot of volatile markets. You see the cost of credit going up. There's worries about financial conditions getting even tighter. Is there anything that you see as odd in terms of market behavior right now, or something that you worry about?
You know, from our position, I think we feel pretty good about our risk profile and the amount of capital and liquidity we have on the one hand, and the risks that we choose to take, which are really pretty prudent at this point. We're not heavily exposed to the commercial real estate business. We did not have interest rate sensitivity that caused us to lose a lot of money when rates went up significantly. So I think we as a bank are positioned really quite well. But of course, we're always watching markets. We see what's going on in the 10-year Treasury going up to at significant levels. And we watch our credit card portfolio, which is enormous, for signs of what will happen to the consumer. We're seeing some cracks in the spending levels, and yet still very robust spending levels. So I wouldn't say there's anything extraordinary at the moment, but we, of course, are watching.
John, thank you so much for your time today. That was, of course, John Dugan, the chair of Citigroup. With that, I'm going to send it back to you, Madison, New York, and we'll have plenty more throughout the day here in Marrakesh, Morocco.
Francine, thank you. Insightful indeed. An enormous credit card portfolio, and there are a few cracks, but nothing seismic. Francine Lacroix on the ground in Marrakesh at the IMF meetings in Morocco. Coming up with Danny and I, the next conversation. And Katrin Peterson, Senior Investment Strategist at BlackRock Institute. What do the bond moves mean for Anne Katrin? Is it a vulnerability or something more significant in the bond markets? Right here on Bloomberg Brief.
Knife making is almost meditative for me. There's a lot of passion behind it. There's a lot of hard work behind it. And it's not just something that you kind of just brush off like, oh, this is just a knife. People's hands touch this knife. People pour their passion and their soul inside of these products.
The art of blacksmithing has a very long history. Our notion of what it means to be civilized is to have metallurgy, to have the ability to transform the natural world.
When somebody uses my knife, I want them to say, damn! Golly, this is a badass knife.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. ON's running shoes have a unique look, and so does its leadership team. CFO Martin Hoffman is also co-CEO, and he thinks two jobs are better than one.
How do you balance those two roles?
I feel the CFO makes you a better CEO, and the CEO makes you a better CFO.
Watch Chief Future Officer today on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Manus, I want to show you what the 10-year yield has done so far this week. Of course, we've only had 2 days of cash trading, but we have seen it decline 24 basis points from that peak on Friday. We had that hot jobs number followed by dovish Fed speak saying that the market had done some of the work for them. And you can see recently over the past 2 hours, you did have this other big drop in 10-year yields, about 9 basis points today with fears of escalation escalation in the war between Hamas and Israel percolating through this market. Let's try to make sense of it all. Joining us now is Anne-Katrin Peterson, Senior Investment Strategist at BlackRock Investment Institute. Anne-Katrin, you look at the 10-year today, again, a move lower of about 9 basis points. How do you dissect what from that trend is coming from just a haven bid versus an actual change in Fed discourse?
Yeah, I think the latest moves are really interesting, and it's important to dissect exactly what has happened, because this year round, the surge in bond yields, particularly following the summer months, has been driven much more by monetary policy expectations than by term premia. And we do think that generally the risk of holding long-term treasury bonds, there still is some room for term premium to move higher, given the uncertain fiscal policy outlook, also given the current uncertain outlook in the Middle East, which could trigger cost pressures, inflationary pressures, and also given the fact that the Fed so far has been engaging in quantitative tightening while U.S. issuance is high. But nevertheless, when we dissect these two factors, there is more room to run on the term premium front. However, when it comes to the monetary policy expectations, the high for longer environment has been priced following the summer months. And here the Fed dovish comments come into play and could motivate investors to turn into the longer term bond market.
And Katrin, good morning. It's Manus in New York. It's interesting, you chime with one of the most read stories, which is McCormick over at Citi saying, even though term premium has gone above zero, it's only at the bottom of the range. So do you expect a much bigger move? How much bigger a move do you expect in term premium before you would shift from your underweight long-term U.S. government bonds, which is a high conviction for you? So how much richer does it need to get before you will shift?
Yeah, that's an important question, Manus, and I think we need to differentiate here between our tactical position, our tactical long-held underweight in U.S. Treasuries, which has served us well given the rise and surging yields, and then the more strategic view. Given the more strategically, the term premium has more room to rise historically. Just based on historic moves, about 100 basis points or so could be within the realms of possibilities. However, then, more tactically, the focus seems to now be shifting more towards the Fed shifting tone, and this could tactically mean that the next move is not doubling up the underweight on the long end U.S. Treasuries, however, then rather going towards neutral. And let me also highlight that in European government bonds, so euro area government bonds like 10-year bonds and also UK gilts, we have become more constructive on duration since summer.
Okay, so in that environment, I just have to wonder how much potential upside is there when the data comes in? Because the Fed still, as they always say they have been, is data dependent. We're going to get CPI this week. Is there a big risk, given positioning, given the volatility we've seen, that could upset the apple cart once again?
Yeah, so it is important to know that inflation has progressed this year, so some disinflation has been observed. However, this is resolving pandemic-related mismatches in services and product markets and also on the labor market. So, for example, on the labor market, what has been happening is rehiring dynamics post-pandemic. So looking forward into next year, we think that U.S. inflation could be put on a roller coaster ride, given that the U.S. working population is aging, and hence there might be some labor shortages coming to the forefront again. So we do see some more volatile and more persistent inflation picture that is currently priced, hence our view that the term premium might rise.
And I like that sort of top line that you've got, which is hold on tight because of this roller coaster in inflation that's going to come. What I really want to try and understand is what is it that drives the sort of the next swing, the second round effect? Is it the energy impact, which obviously war, we are now firmly at war and we don't know the duration of that, or is it higher and more enduring structural inflation, as Larry Fink said to Danny a couple of weeks ago? It's embedded, and that's about wages, isn't it, Anne-Katrin?
Yes, so in the shorter term, it's exactly what you say, the energy costs, which could be related to another jump in oil prices, depending on how the tragic conflict evolves. But then longer term, what really will put inflation at a higher level are more structural forces at play, which we also like to call mega forces. And one of them is demographics that I talked about already. Mm-hmm. So the U.S. Aging into workforce aging into retirement. Another one is the low carbon transition, which will again, on a longer term horizon, mean higher energy costs.
And Katrin, I'm afraid we're going to have to leave it there. Thank you so much for joining me this morning, and Katrin Peterson there from BlackRock. Now, coming up, we're going to have a look at some of the market-moving events to watch throughout the day. But first, let me show you what your markets are doing. S&P 500 futures continue to march higher after yesterday gaining about 0.5%. The dollar slightly weakens. Again, it is that bid into the 10-year that's caught us all by surprise, down about 9 basis points off the back of heightened geopolitical tensions, the heightened war and fears of escalation. But strangely, crude coming down in that environment, $85 a barrel. This is Bloomberg.
That's me, Max. What's up? How are you? I have been writing about Wall Street for almost 15 years. And what that means is I write about feuds and rage and rises and falls and comebacks. And every now and then, I also write about a couple of villains. Thank you so much. And now, I am about to do something new and very, very scary. We are making a show, and it's based on Bloomberg Businessweek magazine. So what is this show about? It's a show about money, power, culture, pop business. We're gonna ask complicated and profound people about their ideas, their careers, their lives, their risks, their failures, their imagination.
It's so incredibly liberating not to care what other people think.
I was giving my tools to other communities. I wanted to bring those tools home.
Tune in. Please, really actually tune in. I desperately need an audience.
You're not selling the Patriots, you're not selling the packaging company. I guess you don't like to sell things, right?
I really don't. We try to create a family environment in everything we're involved in. People want to be part of something that's bigger than themselves.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Brief. I'm Danny Berger in London. Manish Cranny is in New York. Let's get you set up for your trading day with a look at what is ahead. We're going to be getting U.S. PPI data. That comes in at 8:30 a.m. Eastern. It'll be followed by more Fed speak and Fed minutes. Those will be published at 2 p.m. Of course, they might not capture some of the dovish turns we've gotten over the past few days. Now, this evening, the House will hold the Speaker election. The outcome of this contest could determine the fate of the next round of aid for Ukraine, as well as the likelihood of another government shutdown. And Birkenstock makes its trading debut on the New York Stock Exchange. The latest IPO will test investor demand for risk amid increasingly uncertain times. Manus, the little birdie told me you were outside the Dior shop yesterday. Did you see any Dior Birkenstocks? Did you buy any Dior Birkenstocks?
It's homage for you, Danny. They've got a pretty magnificent sort of frontal here. But you got to say, I was looking for the $1,000 Birkenstocks. I had the Amex with me, and I was going to get Danny a little gift. I mean, $46 a share. No, don't worry, I'm not getting you any gifts. $46 a share, really a $9 billion valuation. Do you have any Birkenstocks? That's the question. I bet you've got Dior Birkenstocks.
I do, but I feel like I should say I don't because clearly you're not getting me any gifts, and I'm kind of sad now, Manus.
Hey, you know what? But, you know, you look at that IPO, it's the 4th biggest this year, and then you look at Louis Vuitton.
Yeah.
This year's gains completely wiped out.
Yeah, and of course, Arnaud's family office, part of the company that owns Birkenstock, and will be IPOing it. All right, that's it for us at Bloomberg Brief.
Julie Swinehart is supremely skilled at navigating the rapids of real estate. That's important because real estate development is the next frontier in the business of sports. Fenway Sports Group has a blockbuster project in the works.
We have 5 acres to play with here. And when all is said and done, we expect 2 million square feet across residential, commercial, retail.
Given the track record of Messrs. Henry, Werner, and Gordon, the Fenway Corners plan comes with high hopes of success. That doesn't mean it will be an easy lift, especially right now.
What have you learned with the dynamic move of the interest rates? Do you go fixed structure or floating structure, much more like what they do in Europe?
Yes and yes. We have a mix currently. It's a little bit of a different model than what I was used to in the public company space. Say in some ways we provide ourselves with a natural hedge, leaving some of our debt floating and some fixed.
Julie Swinehart took me on a walking tour into the future.
This is going to become the true entrance to Fenway Park, and that's part of the attractiveness of this project is the age-old recipe of increasing dwell times, bringing fans to the park, bringing in businesses, maintaining what's here and preserving some of the historic nature of what you see around you, but making it even more accessible, making it more fan-friendly.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Investors are lacking conviction one way or another, and I think perhaps key to this will be whether or not this conflict does expand.
When you see rates move at this speed and in this quantity, you always worry that something may fall off the bus.
I think the mindset and the thought process is finally shifting after years and years of low interest rates.
Everybody's worried about their ability to finance.
We're not fully back to where we need to be to say mission accomplished.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Your equity market positive by 0.2% on the S&P on a 3-day winning streak on the S&P 500. Lisa, if you want to focus on the data, the week starts today.
PPI coming out at 8:30 a.m. ahead of CPI coming out tomorrow. It's interesting to me, though, whether the economic data is really what's driving some of the gains that we're seeing in stocks and, frankly, in bonds, which arguably is what's leading stocks, or how much this is just either a haven trade or just listening to the Fed speak or just a blow off of the top that we saw last week. Basically,
We've talked a lot about it in the last 24 hours. Fed officials becoming comfortable allowing the market to do the work for them. Then the market stops doing the work for them. I can only think of one hawk on the FOMC right now who's really pushing for more hikes, and it's Mickey Bowman,
right, Mickey
the
Bowman,
governor of the Fed.
Coming out this morning. But even the hawkish hawk seems to be dampening the tone a little bit, basically saying maybe one more hike is needed, but softening the tone around the edges. It seems like everybody has been taken a bit off guard by the rise in the long-term yields. And so there is this question of how much does that do the work for them? And then, oh yeah, if the market gets ahead of that and then pushes yields back down, wait a second, a rate hike is back on the table.
She's sounding very lonely. This can all change today. PPI a little bit later, as Lisa indicated. CPI tomorrow. Then we'll get the bank earnings kicking off on Friday. We're on Deal Watch as well this morning. Exxon, Pioneer, talked about it for the last week or so following reporting from the Wall Street Journal. We're reporting here at Bloomberg they're very close to closing this $58 billion deal. Lisa, $250 a share, the offer.
The bigger picture here is that basically it would make Exxon the big kahuna in the Permian Basin, which is the most productive shale area in the U.S. And basically this would allow them to act better as a swing producer. They could increase production more quickly and more agilely in response to shocks. I do wonder how much the timing of this, yes, it's because they've got a lot of money and what else are they going to do, but also there won't be as much pushback from a regulatory standpoint, I imagine, given the fact that the U.S. would like energy independence a little bit more than maybe in previous years.
243 in the pre-market, so very, very close to that offer price, that reported offer price. We're looking out for a possible announcement as soon as this morning, so look out for that as well a little bit later. Also need to talk about LVMH, the luxury goods producer over in Europe. At one point this year, that stock was higher by close to 30%. The peak was back in spring. Then we've rolled over aggressively. It's the end of the post-pandemic luxury boom, Bramo. It's the end.
Who was it who called the top perfectly and basically said that we're going to be...
Plurimi Wealth.
Yes, Plurimi Wealth. That was perfect. He was going to be selling LVMH and Hermes. It's hard for me to get my head around this and say this is a softening in consumer trends. This is basically a normalization. It's basically, all right, you bought everything that you could. You're done. Go home.
The CFO said almost exactly that.
Exactly.
We're going back to trend, and we're all trying to work out what trend is, what normal is. Patrick Armstrong, Plurimi.
There you go.
Just a fantastic call. On this program, he talked about it, yeah. Sticking with Hermes, though, right? Getting out of LVMH.
LVMH, thank you.
We can return to that another time. The latest on day 5 of the Israel-Hamas war, the numbers coming out of this, Lisa, deeply, deeply upsetting. According to the IDF spokesman, the overwhelming majority of the 1,200 Israeli fatalities, civilians.
It's been horrific. I don't know how else to say it. This news cycle has been incredibly difficult. And I think that anyone who sees the images and sees the stories that are coming out and just says categorically that Hamas's actions were horrific, has lost touch with their humanity. There is a question of what to do next and what the U.S.'s role and what the international role is at a time when everyone is concerned about this escalating in a way that becomes protracted and very difficult more broadly.
Plenty of updates from the U.S. side of things in the last 24 hours or so. We had a passionate address from the President of the United States. We now understand the Secretary of State, Antony Blinken, will travel to Israel and Jordan from Wednesday to Friday, the State Department said in a statement that we've had in the last few hours. The United States now believes at least 20 American citizens are missing after the attack over the weekend. We still don't know the number of hostages being held, according to the National Security Advisor, Jake Sullivan, still trying to get some clarity on a major issue.
Which just speaks to the fact that even though the death toll has been going up, the reason why is not necessarily because more people are being killed, but because more bodies are being found. There has been a discovery process in place right now that is maudlin and horrific for everybody who's involved in it, but it just shows the scope of uncertainty of who's accounted for and who isn't, and the fate of the people who may have been taken over to Gaza.
We'll try and get some clarity on the consequences of all of this. Julie Norman of UCL joining us in about 10 minutes' time. Let's turn to the price action. Your equity market on the S&P 500 positive by 0.2%. The rally continues in the Treasury market. Yields down by another 10 basis points on a 10-year. Lisa, we were thinking about 5% on Friday after the blowout payrolls report. We're back down to 4.55.
In 2 days, 0.25% drop in 10-year yields. Just to give you a sense of the size and scope, that would be the most for a 2-day drop going back to July, at some point to May. Does the data verify this? And this is sort of the true test. 8:30 a.m. we do get September PPI. The precursor, as John was mentioning, to CPI coming out tomorrow. Also ahead of that 1 p.m. auction, a $35 billion auction of 10-year notes. And it comes at a time of disinflation, yes, but skepticism about whether this will stick or whether it's transitory disinflation. I know it is head-bending, but this is sort of where people are at. Today, the Fed speak does continue. Fed Governor Chris Waller, Atlanta Fed President Raphael Bostic, Boston Fed President Susan Collins. And at 2 p.m., we do get the FOMC minutes from last month's meeting, although, John, you did mention, how outdated are these? I mean, honestly, it seems like, what are we going to learn from this?
Well, I don't know, because the 10 years back to where it was, so maybe it's relevant.
Well,
no
that's
idea.
true. I mean, maybe it's relevant, although I guess that maybe people will glean more from the statements of some of the Fed officials. And then today is the big day when it comes to trying to choose leadership in the House. I believe that the Republicans are going to gather around 10 a.m. this morning to try to settle on a speaker. They're probably going to hold a vote with the big battle between Louisiana's Steve Scalise and Ohio's Jim Jordan.
Lisa, thanks for that. The update, the day ahead looks like that. Joining us now is Ben Gutteridge, the Investment Director at Invesco Investment Solutions. Ben, you seem to like equities when yields were getting closer to 5%. Do you really like them now they're getting closer to 4.50?
Well, good morning, and yes, we do. I'm aware it might sort of seem hopelessly optimistic, but our suggestion is that these inflationary trends that are in place, that inflationary pressures are abating, can continue, and coupled with some resilient growth, could be a pleasant mix for equities. Certainly some unease about that positive view, but on balance, that's where we sit.
Within the equity market, what do you like right now and why?
Well, I think based on, as I said, that marginal view on being positive on equities, we are having to take something of a barbell approach. I mean, on the basis we think, there is sort of an economic slowdown. We do like US equities, and therefore with it, that they're considered sort of the higher quality equity market around the world. Within US equities, now that's sort of by proxy liking the sort of loosely defined technology sector. But I think we're going to have to barbell that. I mean, heaven forbid you get something of a repeat of 2022. Inflationary pressures resurgent, not least given by what's happening in commodity markets. And the energy complex could do pretty well out of that. So a bit of a barbell between, as I say, that loosely defined tech sector and energy markets.
Ben, I feel a little bit like we're playing whack-a-mole with the daily narrative, and we're trying to understand how the recent events factor into longer-term decision-making and just in general people's thought process. It sounds like you have not wavered from your views, and that really everything that we've been talking about kind of factors in, not as noise, but sort of on the peripheries to watch. Is that an accurate characterization?
Well, I think it's fair. Yeah, I know we are sort of more wedded to a longer term view. Shorter term dynamics can really leave you chasing your tail in this sort of cruel world of investing. And look, I think the risk to our view is that inflationary pressures return, and that can be a function of geopolitics, which is obviously a very harrowing story, but and also an unpredictable one. I think also we're worried about this sort of resilient growth story, the jobs market in good shape, and for these inflationary trends leading to a boost in real income. So lower inflation could lead to higher inflation through, as I say, real income growth. So look, we are cautious on this view. We're ready to move on it, particularly if equity markets are strong into the year end. That would alert us to potentially pivoting to a more defensive position. But sort of the long-term view remains supportive for equities as well.
What would make you sort of trigger that kind of view? What would you have to see to give you some sort of sense that maybe things are too strong, especially in light of the ballast that a lot of people are looking toward, which is earnings that kick off on Friday?
Yeah, I mean, I think it's signs that inflationary expectations are climbing once again. Maybe you can see that in elements of the bond market. Maybe you sort of see it in commodity prices and unfortunate developments in the geopolitical situation, even yet more unfortunate developments in the geopolitical framework. So, those are the things that give us the greatest concern. We recognise the toing and froing and the political shenanigans that are going on can sort of make hedge funds sort of put whack trades on over the short term. But over the medium term, it is, we think, inflation that's going to be underpin market direction. If it comes back, and we're watching for signals on that, that's what's going to get us more cautious.
Let's finish on the bond market move. 10-year down by 10 basis points again today. The whole curve, 2s out to 30s yesterday. Double-digit move lower. Got a 10-year yield right now of 4.55. I think it was Neil Kashkari of the Minneapolis Fed yesterday who said he was perplexed by the move in yields. Ben, have you been equally perplexed?
Well, I guess so. I mean, these sort of day-to-day moves are quite astounding and sometimes sort of quite difficult to square as one narrative sort of unfolds based on the following day's move. That I think we accept that bond yields have moved higher at the longer end relative to the shorter end because maybe there's some sort of supply-demand dynamics there, deficits in the face of, an inverted yield curve, therefore not much value in the long end. But likewise, I think there's an acceptance that the US economy, global economy, can probably deal with higher rates. So we're not averse to the move in general for higher bond yields. But where do we go from here? We think, whilst it could be a volatile period, that with inflationary trends continuing and abating at the margin, bond yields hover around this level, maybe move a little lower. And that isn't bad news for equities.
Hey, Ben, thanks for the update. Ben Gutteridge there of Invesco.
Pleasure.
The bear steepener turns into a bull flattener. Lots of bond market jargon there, but essentially what was taking place was the long end was selling off, yields were going higher. Now we're seeing a bigger move at the long end again, but yields are going lower. So the 2-year versus the 10-year differential drops to negative 40. That curve is flattered by about 9 basis points on the day, Bramo.
Basically, what this tells me is that the long end is just swinging around and that nobody can really understand where it's going to settle out. And there's actually more stability in the front end because Fed policy seems more certain than longer-term inflation dynamics and longer-term term premia, the idea of where the fiscal picture fits in to inflation and to investor appetite.
I couldn't have said it better myself. This is what Kashkari had to say yesterday. It's possible that rising yields may mean the Fed has to do less. What do falling yields mean? That they have to do more?
Well, potentially, right? I mean, if the yields are falling for the wrong reason, the issue is, and Mary Daly talked about this extensively and others have as well, markets and people hate uncertainty. And so what we're dealing with right now is deep uncertainty, not only about near-term economic data, but the longer-term paradigm of where we're going to settle out. And as a result, you're seeing these massive swings that are definitely just contributing to the lack of certainty that you can feel underpinning a lot of investing.
We spoke to Priya Misra of JP Morgan Asset Management in the last week. Priya made the point, maybe we should just get used to this. Bigger moves at the long end and not try and ascribe too much of a narrative to it on any given day.
The problem is this underpins so many instruments.
Oh,
it's one thing to say that about, AMC stock. It's another thing to say that about benchmark treasuries that underpin the borrowing costs of mortgages and car loans and everything else. So at a certain point, it does have consequences longer term.
Once you start getting into the game that the Fed has got in over the last week, sort of outsourcing monetary policy to the market, and then the market says, have it back, have it back. It's not a very good game to get involved in.
At some point, the data will triumph over the game. That's what people are hoping for.
We get some data a little bit later. PPI this morning, CPI tomorrow, Sebastian Page at T. Rowe Price in the next hour from New York City. This is Bloomberg.
York City.
In London, in Sydney,
from Washington.
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
The top names in global leadership are on Bloomberg.
Right from the start, I decided to open our border and to take in millions of refugees from Ukraine. We believed, and we still believe, that it is necessary, and we try to serve as neighbors should do.
If we want peace, if we want a negotiated outcome, strengthen Ukraine on the battlefield, because that's the only way to convince Putin that he will not win on the battlefield.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything. The top names in global leadership are on Bloomberg.
The conflict between the U.S. and China has escalated so much. This is one of my greatest fears, that a small nation is forced to choose sides.
Bloomberg. Context changes everything.
We must be crystal clear. We stand with Israel. The Department of Defense has moved the USS Gerald R. Ford Carrier Strike Group to the Eastern Mediterranean and bolstered our fighter aircraft presence. And we stand ready to move in additional assets as needed. Let me say again, to any country, any organization, anyone thinking of taking advantage of this situation, I have one word: don't.
We stand with Israel. The words of the President of the United States, the assistance from America sounds like as follows. Support that arrived or would soon be on its way includes ammunition, Iron Dome interceptors, and Lisa, the world's largest aircraft carrier.
There is a real question here about where the U.S. really draws the line in terms of stepping in or not. They have said that the goal is deterrence, to deter, in particular, Lebanon and Syria and the Hezbollah factions within from lobbing some sort of attack from the north. There is a question, though, about where that red line is. And again, the big issue, when does this really escalate into something that draws in more countries and more human lives?
If you looked at the market, you wouldn't have a clue any of this was happening, would you? Looking at equities right now on the S&P, 3 days of gains could well become day 4 on the S&P 500, positive by 0.2%. Maybe you'd get a hint from this monster move you've seen in the bond market, but we were coming off the back of 5 weeks of yields climbing, and now they're falling. Day 1, day 2, day 3, yields down by 10 basis points on a 10-year, Lisa, 455.62.
Cold-hearted. That's how Jane Foley described it.
Many others have too.
And that's basically an accurate description. People are looking at money, which seems like an insignificant kind of concept at a moment of such human tragedy. And yet, if that's your job, that's your job. And that's where markets are at this moment. That said, cold-hearted markets can change on a dime if suddenly oil is affected in a more significant way.
To that point, this comes down to Iran. This is what the National Security Advisor, Jake Sullivan, had to say about the Iran question at the moment. While Iran plays this broad role, a sustained deep and dark role in providing all of this support and capabilities to Hamas, in terms of this particular gruesome attack over the weekend, we don't currently have that information. We will continue to look for it. It's a question and a question and a question that we've all been asking. Lisa, I think you and I are on the same page. When you hear things like that, is that a distinction without a difference? And that's what I know you were trying to get into with John Kirby yesterday.
Basically, what is the difference between knowing that they orchestrated something and knowing that they financed it, helped with the planning, at least on a peripheral level? Where is that line in the sand, and how much is this a lack of willingness to, and for good reason, potentially, go into Iran and to escalate in that kind of way? Because if you deem them to have a real orchestrating hand in this and you don't take that kind of action, that sends a signal too. So you've seen that reluctance both on the Israeli and the U.S. side, and how much is this that they just have decided it's unclear whether we really want to take that extra step.
The Israel-Hamas war enters day 5. Joining us now is Julie Norman, the UCR Center on U.S. Politics Co-Director. Julie, wonderful to hear from you. Allow me to offer you the chance to answer that question. Is that a distinction without a difference?
You know, I do think it's important to differentiate on this, and it's interesting to me that Israel in particular is being very cautious to pin blame directly on Iran. Again, Israel and the U.S. have long known that Iran has funded Hamas, has provided much of their weaponry, et cetera. But this operation does look to be different. And again, importantly, I think a direct pin on Iran would escalate the region very quickly. This wouldn't just be Israel and Iran as two states. It would also include all of Iran's proxy groups, Hezbollah, proxy groups in Iraq and elsewhere. And so it could just blow up very quickly. And I think both the U.S. and Israel are aware of that. And one of their goals in these coming days is going to be containment, along with, retribution and deterrent. So that's on everyone's mind right now. It doesn't mean that that Iran is not going to play into this, but I think for the short, immediate future, cooler heads are trying to figure out where exactly to place the blame and act accordingly.
Julie, walk us through the tension in that statement, the words that you just used, almost a contradiction between retribution and containment. Are those two things compatible?
Well, I think this is going to be a real challenge over the next few days, the next few weeks. On the one hand, of course, Israel wants retribution for these attacks. They want to deter a broader conflict, as does the U.S. But at the same time, you're trying to contain, again, the conflict, as we just spoke about, from spilling out, whether it's in the West Bank and Hezbollah or throughout the region, or just over the long term. And John, Israel is going to be, if they do launch a ground offensive, it's going to be very difficult. Gaza is a very highly populated urban area. You would face mass casualties for Israeli military personnel, for Palestinian civilians, which we're already seeing, and of course the dozens of hostages that are being held in Gaza. So this would be very tricky. It's also very tricky to just oust Hamas as a group. And it's very tricky to know what would be next for Gaza. So I think the road ahead is going to be challenging for Israel. We've seen these, I would say Israel-Palestine has become almost emblematic of the term cycles of violence, with different kinds of acts of retribution that then lead to more acts and unfortunately civilian casualties on both sides. So that's the reality of the situation, and it's a very tough needle to thread.
Julie, given all of that, what do you make of the discussion of John Kirby of the U.S. talking yesterday about Qatar actively trying to negotiate some sort of hostage release, something that could maybe de-escalate in the way that you're talking about?
Yeah, it'll be really interesting to see Qatar's role in this. We have heard these reports of some kind of negotiations around hostages, at least around women and children and elderly, some kind of negotiation that might happen there. Qatar has been an important intermediary, I would say, between the U.S. and Israel and groups that they can't or won't negotiate directly with. And I think we're going to see that playing an important role here. Again, this question of the hostages is very much in the forefront for Israel and how they coordinate any kind of operation. It's also very much obviously in the minds of the U.S. and other countries that have their citizens being held there right now.
What are the red lines, Julie? Do we have a sense of, as Israel plans the incursion, the potential ground operation in Gaza, is there a sense of pressure being placed on Israel to show restraint in certain areas from the U.S., from other allies, as well as from Middle Eastern partners like Saudi Arabia that had previously been discussing with Israel?
Sure, absolutely. I think we heard from Biden yesterday a very committed U.S. Response to Israel. We're with Israel and really not setting any red lines at this point. We're hearing different messaging from the EU, from European partners and allies, and of course from within the region, calling on Israel to stay within the bounds of international law, within the bounds of kind of rules of war and these kinds of things in terms of proportionality and targeting of civilians. So I think this will be an ongoing conversation. I think it's a very difficult one. I think many feel a lot of aversion to talking about both sides, whereas others feel it very necessary to grieve for the civilian loss of life on both sides of this border.
Julie, when you hear numbers like more than 1,000 civilians, and then we have conversations where we talk about a proportional response, what on earth is a proportional response to what took place over the weekend?
Yeah, I think many in Israel will be asking that. And again, I think this has been, again, a situation that unfortunately time and time again has played out in the Middle East and in this Israel-Palestine conflict. Over the decades, we have seen different kinds of atrocities that, again, are then met with a response that also results in civilian casualties that then just escalate for many this kind of long-term security challenge of then getting more people involved in resistance and whatnot. So it's a very challenging path, I would say, morally as well as strategically for Israel as they try and balance what might be short-term necessities and responses with what might be real long-term strategic thinking of what does this mean for the long run and what kind of future are we setting up if we respond in a way that just fuels this conflict even further.
Julie, thank you. Thank you for your insight. Julie Norman there of the UCL Center on US Politics. It's a phrase we've heard so many times, Lisa. over the last couple of days, a proportional response. I've got no idea what that is to what took place over the weekend.
I think that's well said. I think right now, this is the difficult moment that we're in because what is the goal at a certain point? At the same time, what does proportional response mean when we're just uncovering the scope of the terror of entire families wiped out in cold blood? I mean, some of the stories and some of the pictures are just horrific. And at the same time, it's igniting long-standing, simmering resentments and anger. At some point, how do you break the cycle?
Truly, truly tragic. The coverage will continue. The coverage of markets continues as well. Your equity market on the S&P 500 shaping up as follows on the S&P. 3 days of gains could well become day 4, up by 0.2%. The contrast between this and what's happening elsewhere could not be starker. Equities continue to rally. From New York City, good morning.
I was putting so much pressure on myself. And when I changed my mindset midway through the tournament and just approached it one game at a time.
Lloyd with Morgan streaking. She's chipping the goalkeeper! Off the post and in! Hat-trick for Lloyd!
I went from really just being under the radar to suddenly being in the spotlight.
You know who I'm talking about, Carly Lloyd! Carly Lloyd! Ladies and gentlemen, we have an American hero.
I had speaking engagements, sponsors that wanted to sign me, appearances, you name it, I had it. It became very mentally draining for the next easily couple years because I was extremely busy. But I knew that if I'm going to have any type of retirement, any type of financial stability when I'm done playing, I had to take every advantage of my opportunity.
This is Daybreak Europe. I'm Kriti Gupta. Let's get to the stories that set your agenda.
Taking you from the U.S. market's close.
A lot of this was priced into the U.S. session.
To the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Along Longest daily winning streak on the S&P 500 going back to August could well become day 4 on the S&P. Equity futures shaping up as follows. Equities pushing higher on the S&P 500 by 0.2%. On the Nasdaq, up by 0.3%. The sector breakdown, utilities, discretionary, reversing recent moves. Top of the pile yesterday. Off the back of this in the bond market, it continues. Treasuries rallying hard. Yields lower by around about 10 basis points on a 10-year. Just to see this all at the long end, Lisa, you talked about this. Just to see this at the long end. 10-year down by 10 basis points. Friday, we were talking about new cycle highs, 10-year, 30-year. 30-year through 5%, 10-year pushing 5%. Now back down to 455 and 472.
Is there any conviction behind this, though? I mean, that's really what I'm curious, right? Because we still have people who are saying things are too volatile to get in with any kind of narrative. This feels like, you know, narrative ping pong, whatever you want to call it, a feeling of just deep uncertainty about the longer term kind of paradigm at a time where the data isn't really helping, and there's geopolitical risk that also is creating a deep sense of insecurity.
Well, the recipe right now is 1 part risk aversion, 2 parts Fed speak. Seems to be the story of the last couple of days, right?
Sure, that's the story. Now, how is PPI at 8:30 going to really factor in? And then if we get a hot CPI print tomorrow, does it all reverse all in one day, or do people cling to some of the other stories, right? And what's going to be the sticking point, given the fact that, yeah, maybe Fed officials are saying that they're not going to raise rates again, but they're not saying that they're going to cut anytime soon. They're not saying that that really changes their longer-term view. And if anything, on the margins, that would leave longer-term yields higher if everything else is equal in the U.S. economy.
We can guarantee you this. The intraday price action in the bond market will set the tone for the following day's conversation about the outlook for the next 12 months. Then it might change again. Let's finish on foreign exchange. The euro looks a little something like this against the US dollar. The euro in and around 106, seen a bit of dollar weakness in the last 24 hours. Bit of a programming note. Tom Keane has gone over to Morocco for the IMF World Bank meetings. No doubt he'll be chasing down the ECB president, Christine Lagarde, Lisa, over the next couple of days.
And probably asking her just about this in terms of European weakness, stagflation, potential risk with respect to oil prices, and of course, the best places to eat in Marrakesh.
And drink and all of the above.
Yes,
TK will find the places.
I have no doubt.
I believe he touches down a little bit later this morning. Francine got there early. Look out for Francine Lacqua's interview with Geeta Gopinath at the International Monetary Fund. Well worth checking out on Bloomberg.com and on the Bloomberg terminal. Under surveillance this morning, the death toll from the Israeli-Hamas war rising past 2,000. President Joe Biden vowing to provide Israel full support, including shipment of munitions and intelligence assistance. 14 Americans were killed and others are being held hostage in what Biden is calling an act of sheer evil. Secretary of State Antony Blinken is heading to Israel to show a show of support. Lisa, we still haven't got that much needed clarity on the people who are missing, the people who have been killed, and the people who are still being held hostage.
We don't have a lot of clarity about how this is going to evolve. We also don't have a lot of clarity from the Israeli side about the ground operation in Gaza, let alone what the role of Qatar and Egypt and even the United Arab Emirates is with respect to hostage negotiation and trying to come to some sort of de-escalation. Regardless, I think you asked a good question. What is a proportionate response when we see the tragedies that are unfolding? How do you put this into any framework and then say, okay, how do we move forward at a time where there is seething hatred that has really led to a lot of this?
These are the kind of phrases, Lisa, that get thrown around so much in moments like this that they cease to have meaning. I've got no idea what proportional response means. If you're calling on Israel to have a proportional response, what on earth is a proportional response when you see 1,000 civilians massacred in the way that they were over the weekend?
I don't know how you pick up and move on, and yet that is what people do. There is a point, though, that people are watching, which is where does the U.S. come into play? They are sending a big military ship that is going to get there shortly. This, they say, is for deterrence, to deter Lebanon and Syria and Hezbollah in particular, which has its bases in Lebanon, from getting involved. Where are the red lines? Where are the negotiations? Where does this become an international conflagration that does start to percolate in a more significant way?
Did you see the latest from the Swiss? Typically known for neutrality, a Swiss parliamentary committee calling on the government to label Hamas a terrorist organization. This, as we know, the US and EU already categorized Hamas as that. But the latest from the Swiss, just moving further away from what we typically associate them with, just that neutral stance where they don't get too involved.
All of Europe is still scarred from World War II, and you can feel that deeply ingrained in a lot of the response and the solidarity that you can feel over there.
That's the latest. Much more on that, of course, through this morning. In about 2 hours' time, we'll get another read on the US economy with PPI data coming out ahead of CPI tomorrow. Later this afternoon, we'll get the Fed minutes from the latest meeting. Earlier this morning, we heard from Treasury Secretary Janet Yellen at the IMF meeting in Morocco.
I'm not saying that a soft landing is an absolutely sure thing, but I just continue to think it's the most likely path. But are there risks to this outcome? Of course there are, and global shocks are among them.
Say this almost every time Janet Yellen speaks. Was that the economist or was that the politician?
Well, at this particular speech, she was not only talking about the possibility of a soft landing, she was also talking about the potential for additional sanctions in Iran, the potential for some sort of tax on Russia's money that Europe is looking to wager. There are a lot of things that are very political that she's also talking about, and I do wonder how she's parsing those two, where oil fits into that at a moment when this administration would like to see oil prices go down, and they don't have necessarily the reserves to start really creating that situation. So how does that play, the economy play, in some of these economic but also political decisions?
Here's the latest on Exxon. Pioneer deal closing in the first half of 2024. The news just crossing now. Exxon to buy Pioneer for $60 billion. I'll share some of these headlines with you as they pour out across the Bloomberg terminal. Exxon sees the Pioneer deal closing in the first half of 2024. The board of both companies have approved the transaction. The Permian production volume would be over double at the deal close. They see the deal immediately accretive to EPS and cash flow in 2024. All those comments, Lisa, coming from a slide presentation on the Pioneer deal. We've known about this now for the best part of a week. Pioneer and Exxon getting together.
Exxon trying to really be a major player, and it would be the biggest by far in the Permian Basin, but it also highlights their desire to be a swing player, to increase their production in tandem and much more directly in terms of demand, really showing the production that you've highlighted in the U.S. at a record coming as people talk about the need to move away from fossil fuels. So there just is this interesting dynamic going on in the reality of the shale space and the oil and gas space in the U.S.
More reaction on that deal throughout the program. Just to get you an update on the price action, the pre-market, Exxon is down about 1.8%. The offer price, as we reported a little bit earlier this morning, in at around 250. 253 is the price. We're trading close to it, but still some distance, Lisa. 240 in the pre-market on Pioneer. That stock is up by about 1.3%. Much more on that story a little bit later. Joining us now is Bruce Kasman, Chief Economist and Head of Global Economic Research over at JP Morgan. Bruce, let's start with the Fed speak, which is throwing this market around big time. They're talking about outsourcing monetary policy to the bond market to do the work for them, and then over the space of 2 days, the bond market stops doing the work for them. Now, Bruce, I say this tongue-in-cheek, but I guess I kind of mean it. Does this mean now they have to do more work because we've had a 2-day rally?
I don't think the 2-day rally takes out what has been a fairly material repricing of the Fed, not to more hikes, but to holding high for long, as well as some other factors, which, as you see Fed speakers talk about, determining what that is does matter for monetary policy. But I think in the immediate decision-making, the rise in yields we've seen accumulating over the last 3 months, the better news on inflation, I think that's enough to put them on a pause here that extends certainly through the November FOMC meeting, and I think more likely than not through the end of the year. But they're not, I think, necessarily done. I think where we go on inflation, how much resilience the economy shows into the new year, if we don't get inflation showing signs of moving down below 3% and the economy standing, the Fed could be back in the picture in 2024.
Bruce, is there an economic consequence from the volatility in benchmark rates? And I say this at a time where if you're seeing just massive swings in the rates that people use to determine corporate borrowing costs, mortgage rates, auto loans, credit card debt, at what point does this have an impact on the economy regardless of where those rates settle out?
Yes, I think there's two things going on here. One is if you look at the move up in yields, and even if you combine that with the move up in oil prices, we're not really getting what I think would be a material drag on growth in the near term. And in fact, we also have to take into account the very positive news we've had in financial markets, which with a lag over the summer will boost growth. But at the same time, there's a risk of disruption here. As you're noting, when things move this quickly over short periods of time, there's unrealized losses, there's potential for stress, and sometimes stress in a narrow space can broaden out. I think that is the immediate risk here. It doesn't show any signs of having been realized yet, but I think we have to watch out for it as we move through the next couple of months.
Ben Gutteridge earlier this morning was saying that ultimately inflation data will prevail, and that will be sort of the guiding light in this slew of uncertainty that we've seen. When do we get that, right? I mean, we keep talking about how every week this inflation data is going to be the most important. No, wait till next inflation data. Today we get PPI, tomorrow CPI. What could move the needle with the data that we're getting now with respect to this bigger picture where we are in the inflation story?
I actually think that's a little bit of a mistake to think that any run of a couple of months or 3 months on inflation is going to tell you where inflation is going to be in a year. We've obviously had actually 3 months of pretty good news on inflation, and we're not looking for a troubling September reading either from the PPI or the CPI on Thursday. However, I would say that what's really positive here, if you want to take that, is the fact that we've had an economy that's delivered strong growth, but it hasn't put extra pressure on inflation, not from the wage story and not from the unemployment rate, both of which sent a positive message from the Fed in last Friday's report.
Bruce, we were talking earlier, John mentioned the LVMH results that came out, and it does show a normalization, at least as the company characterized, of consumer spending. We've heard this. Where is the line between normalization and rapid deterioration in consumer spending?
I think that's a hard one. And I think part of the problem in terms of watching the economy, not just the U.S., is that we've had some very outsized gains in things as we've been normalizing from COVID depressed levels. The moderation there, which oftentimes is viewed as a sign of weakness ahead, in this case may be sending a different message that we actually are normalizing. I think the consumers generally have pretty darn good fundamentals in terms of labor income, in terms of their balance sheets. I don't think with the consumer we're going to see any meaningful break here, anything that's going to scare us in terms of a sustained bout of weakness, unless the labor market is breaking for other reasons. I think it's actually businesses that will hold the key as to how long this expansion lasts.
Bruce, that word normal, normalizing, Lisa and I have gone back and forth on that. What's normal? What are we going back to?
Well, we're in a business cycle environment where we don't know how long this expansion is going to last. I do think that what we're seeing in the labor market in the U.S., if we want to use that as a guide, is an economy that is starting to settle towards something like 150 to 200,000 jobs, which if we're growing 1.5 to 2 would be, I think, broadly consistent with normal. The question is whether we can settle at that 1.5–2% growth rate after having had a strong third quarter. And there's a whole bunch of things, as you're well aware of, it going on here that speak to it. But I think fundamentally, the economy is still sound. The monetary policy is restrictive, but the Fed, I think, is signaling that it wants to take a pause here. And I don't think what's happening in terms of energy markets, interest rates,